back at it again. Back at another day in the daggone stock market. Freaking Tesla going down. Stock market going down. What the hell is happening? I'll tell you exactly what's happening. What's happening is exactly what you would expect to happen. Why? Because we're going to be getting data now. This is exactly what we've been saying, not only on the channel, but in the alpha reports every day for the last few weeks, that when the government reopens, we're probably going down. Why? Because data coming. So this isn't really a shocker that we're in this, oh man, why all of a sudden is the market going down? It's because now all of a sudden the government's reopened. And what does it mean when the government's reopened? Oh crap, we're gonna get all this data. And so think about the data that we're gonna be getting. We're gonna be getting the September jobs report. It's already been cooked, it's ready for release. September jobs report to come out next week. The October jobs report will presumably follow shortly after that. We have a report here now that let's see here, Citigroup expects the October CPI reports to still come out soon. And this is going to be a whole lot of data, right? This is going to be a lot of information. You also have Kashkari at the Fed. He's yapping right now. Kashkari sees mixed signals and some sectors of labor market seem under pressure. You know, I mean, I don't know that that's incredibly insightful, but it's a little bit of what's going on today in terms of why the market is tanking. Now, some of the calls we've had here recently, I've been talking about Tesla going down to 414 after the Elon vote, since before the Elon vote. I'm like, hey, listen, like over all of this region over here, we're running on the vote. We're like, after the vote, traders are going to exit Tesla. And so if you're asking, why is Tesla selling down? It's because people are taking profits. And going to 414 was, I felt like a 90% certainty. And, you know, here we are. We've lost 414. We're at 408. You don't really want to know where the next line is. And I'm not like trying to call some kind of major bearish movement here on Tesla. It's just 414 was pretty obvious. You know, what happens now? Hopefully we get good data. I mean, look, we couldn't even hold the 617 here on, I'm actually going to upgrade this now. We couldn't even hold 617 on the Qs. Let's go with the white line. I'll go with a thicker white line now. There we go. In case you wonder, my line colors are the World of Warcraft rarity colors, right? We go from gray to white to green to blue to legendary orange. But anyway, so yeah, it's no surprise that with this massive set of data coming out that we're going to be down. But you know, if you've been following the channel, you already expected this. If you've been reading the alpha reports, you've already expected this. I trimmed some more. I sold some more stock yesterday because I'm like, all right, government's going to reopen tonight. I'm going to sell a little bit and raise some cash to go buy the dip. And but I really want to buy, you know, once the data confirms that we're not falling off a cliff. You know, I'm kind of in that mid-range. I really hope we don't fall off a cliff. I think it'll hurt a lot of the economy. It'll hurt a lot of people, and it'll be a generation of hell if we fall off the cliff. So I'm really hopeful that our September, October, November jobs data is at least positive. That's what you want. If you get negative, it's bad. So I think it's very, very binary here, you know? Positive, good, negative, bad. Right? So it's interesting. So some of y'all here are talking about sentiment being low. Let's see here. Down, down, down. Yeah. Then you've got, somebody says, I lost 30% last week. Oh no, what happened, man? Manual light, Manny-ite? Anyway, somebody says, so sick and tired of this market. Yikes. Not ideal. What's this? Let's see here. Kevin for governor. Oh, well, thank you for saying that. Somebody else says, well, yay, more debt. No, you don't. This is definitely not the market that you want to be heavily margined in. I'm telling you. And I talked about this as well. Like, I've seen people now get six-figure margin calls, and we're still so freaking close to the top of the market. Like, what the hell, right? So why are you so deep in margin that you're getting margin called this early in the cycle? That's scary. That makes you mega sensitive to a bad jobs read, right? And right now we're obviously like pre-selling down in anticipation of job numbers and CPI numbers. It creates nervousness. You know, people don't want to be caught off sides. People want to deleverage. I think that's really what's happening here. All of this could be a great buy the dip opportunity if we get good job numbers. That's what it comes down to. So let's see here. Somebody says gold to 4,400. Honestly, gold could run to 5,000 in fear of a recession if we get bad job numbers. You could literally be these 2 job reports away from 5,000 on gold. Wouldn't surprise me. Now, it usually goes down in recession, but wouldn't surprise me at all. And it says, what's the minimum to invest in HouseHack? It's 20K. You could go to househack.com or reinvest.co, read the disclosures over there. When everyone says crash at the same time, I bet we're all wrong for that. But that's the thing is, I don't actually think everybody says crash at the same time. You have to look at positioning, right? Like people, if you're reading just like comments on Twitter or like YouTube titles or whatever, you're not gonna know what's actually going on. You've got to look at contextually what's happening in data. And so I have, let me grab that screenshot. Where was that beautiful, delicious sentiment screenshot? I'm honestly gonna title this sentiment versus positioning, okay? So we talked about this briefly yesterday. This is sentiment versus, that's copper to gold. It's the same color, but it's not that one. Okay. Bro, what the hell? Where did I put it? Huh. I don't know where I put the darn thing. Anyway, that's crazy. I had this up yesterday and I can't find it anymore. Anyway, the point is sentiment is down right now, yet positioning is at like all-time highs. So a lot of people are looking going, wait, how do we reconcile this? This doesn't make sense. Like how can positioning be so, I found it, so misaligned with sentiment because they usually align. Okay, here we go. Got it, right? So, you know, people might be saying, oh, bearish or whatever, but their actual positioning is not in line with sentiment right now, which is scary. So somebody here says, whoever is margin called in this market should not be trading. That's interesting. Yeah, you're saying, and then they're crying, we're going to go to zero because they feel better. Well, yeah, I mean, there's a risk of that, of sort of having like a jaded outlook after that. And it's understandable because all of the stock brokerages are really trying to pump you up on margin right now. I hate to say it, but like it seems daily now that either Webull or Robinhood or these brokers are like, hey, bro, load up on margin, because they want to grow their asset bases. And the easiest way to grow the asset basis is by you taking on more debt. It's not great. Tom from MySpace, you got your EBT card filled up again? That's great. I'm happy for you, Tom. So good point. I'm just noticing more people leaning into the crash idea right now. Yeah, it's hard to like try to, because you know, it's also possible that the people that are, you have to think about us as individuals, like people watching stock market open live streams, we are a small lot, right? You got to think, like the people you got to think about are the normal everyday people who open up a Robinhood account and they don't know anything about stocks. They never care. They don't trade stocks. They're just like, I had some extra cash. Everybody's getting rich in the stock market. I'm going to throw money in the stock market too. They don't watch market videos. They don't read news. They never open up the Wall Street Journal, whatever, right? I don't know what a financial statement is. This is a very different lot. You know, people who I feel like who are watching these videos, the videos that we do here, I feel like y'all are quite educated. You could be a little cynical, but you know, you're looking for real data and value in terms of like what actually is going on out there. And I feel like if like our bunch is negative, it's still going to be a while before everybody is freaking out. You know what I mean? And I think that actually could be a reason why you know, people who are involved in the market all the time can sometimes be early to trends. That goes both ways. You could be early to being bearish, but you could also be early to be on meme plays. I see that. Like, Open Door in the alpha reports, when we were talking about it at 80 cents or $1, and we're like, this has meme potential, that's really early. But that's because we're doing fundamental analysis, we're looking at balance sheets or whatever. When it's like $9, it's like, okay, we're like at the end of the extension of the meme cycle, when everybody's talking about it. But anyway, so these data releases are going to be what make everybody nervous right now. Let's take a peek at some of the coverage that we've got right now. Somebody says, who the F has 20K to invest right now? Dude, I don't know, man, but apparently people do, in fairness. Like, I know it sounds like 20K is a lot, but we just crossed $1 million on this. This was the sheet that I popped up, yesterday? I think it was? 2 days ago? But anyway, this was the house hack the inflows of funding. Like 95% of this is funding inflows. I think there's a little bit of like real estate commission in there or something. But that number on the right for November, it's 1 right now, as far as I'm aware. Oh, it's 1.1 right now. Dude. So this number right now, it just says 1.1. I don't have granularly what the detail of it is, but this just turned to 1.1 right here, which is pretty remarkable. So still, like, we're on pace. I thought October was great, but we're on pace to beat November now with the house hack funding, which is wild. We're on pace to beat October in November. It's crazy. I think it's people diversifying from stocks. You're like, I made good money on stocks, so I'm gonna go diversify a little bit. Wow, there's literally an article. Why it's easier to rob a museum than a jewelry store? Okay, Trump signed spending bill, fine. NASDAQ leads losses. Big tech soaring profits have an ugly underside. OpenAI's losses. Yeah, especially this talk about what's your opinion on AMD. Do you think you can surpass all-time high? I mean, I talked a lot about AMD yesterday. Honestly, watch the beginning of yesterday's live stream. The beginning of yesterday's live stream gives you a lot about, if you watch like the first 10-15 minutes of the live stream yesterday on AMD, you will have your question answered. It literally has AMD in the title. Okay, builders, cheap mortgages are a bad deal for home buyers. That's an interesting phrase because they're overpaying on the purchase price is presumably what they're arguing here. College student who did a wheelie for 93 miles. Oh my gosh. Okay, 3 flights and 4 airports in one day. The rolling shutdown days. Okay, whatever. Okay, editorial board, Trump versus Vance versus Gain AI Act, hurt America, not China, post-shutdown deluge. That'll be interesting. Let's see what this is. All right. Let's see what they're yapping about here. A lot of government businesses stacked up over 43 days. Here's what comes next. If all goes to plan, the House votes soon. Yeah, this has already happened. The Senate's plan passes. Trump signs it. Great. Okay, perfect. So we're reopened. At that point, a ton of government businesses and politics that stacked up during the shutdown will drop in a rush, especially as the House has more than 50 days in recess. Headlines about SNAP benefits and furloughed employees are about to give way to news about discharge petitions, government data, investigations, and fallout. Right. Yeah. So, like, I hate to sound pitchy on the Alpha Report, but I just want to be clear. We've, like, on a daily basis said, if you want to trim stocks, the day to do it is the day before the government reopens. I literally sold $250,000 of stock yesterday, the day before the government reopened, because that's what we've been planning for weeks, is that as soon as the government reopens, people are going to go, yay, the government's open again. Oh, shit, dog, we're about to get all the data. What if it's bad? Deleverage. Like, it's worth having a plan, okay? You don't have to buy the Alpha Report if you don't. Just have a plan, and then none of this is a surprise. So, losing 617 sucks, but it is what it is. Losing 414, not a surprise we got to 414. Now losing 414, we don't have another stop for a while. You're back to mid-3s. And if Tesla has to stand on fundamentals, it's not great, but, hopefully you could regain 414 here pretty rapidly. So we'll see. But man, this just keeps going. Anyway, get the Alpha Report at meetkevin.com. You pay once, you get lifetime access. Guaranteed to get the best price on the Alpha Report. You buy now, and you never have to pay again. You can also pay in 4 if you want at meetkevin.com. All right, headlines about SNAP benefits, the government data coming out. Right, we've just talked about the government data. Probably within the next week, we'll get jobs and CPI reports. Let's see here. Let's see. Quick look at what's coming down. A swearing in. Yeah, nobody cares about this. Data dump. The shutdown delayed crucial reports of the U.S. economy, which will now hit in the next few days and weeks. They include employment figures, as well as data on construction spending, retail sales, imports, exports, and GDP. I mean, honestly, this is a really good point. It's not just jobs or CPI, but it's also all of this other data that's coming out. This is actually a really good point. Let's update that really quickly, because I didn't mention that. This is sort of more, maybe instead of jobs, I should call, well, no, I like calling it jobs. I made a jobs tag on the app. But anyway, other data. Other data we've missed. So what did we have? We had retail sales. Then we have construction data. We have import, exports, and GDP. Import, exports, etc. All of these, by the way, all affect Atlanta Fed real GDP estimates. So we've been a bit blind for that, 4% current estimate. Could get revised if data goes bad, right? So we're sort of, like, a lot of the market's been hanging their hats on this Atlanta Fed GDP report, but the Atlanta Fed GDP report is predicated on data that's mostly been missing. See here. I mean, it's phenomenal. Don't get me wrong. Like, this Q3 GDP is freaking awesome. We're out of Q3 now, by the way. We're into Q4. So what do we have here? We have 4% third quarter growth. And then they're still using data that's coming in. So a lot of this 4% growth could be predicated or could evolve based on new data that comes out. But so far, that Q3 data has been great. Q4 should be lower, so let's put a little warning here, So Q3 will get revised on data, but also expect Q4, as CBO said. People are going to think I'm using AI by putting the dash in here. I used the dash a lot before AI. I found myself not using the double hyphen anymore because people think it's AI. But it's a great tool. I always used to use it as sort of like a comma replacement when I've already used a comma. It just makes it easier to read. But where AI just sprinkles it everywhere. Also, expect Q4 as CBO said, to see a dip in GDP with a recovery in Q1. Right. So that's interesting. Okay. Epstein files. Oh, come on. That's whatever. Anna Paulina, the stock trading ban. Let's see here. What else do we have? Arctic frost fallout. Jack Smith. Targeted phone data of GOP senators. GOP in healthcare. Still got to deal with the healthcare issues. Democrat meltdown. I mean, this is a lot. Not a lot of uncertainty, and I'm only really looking at the data piece. But yeah, a whole lot of junk over here. All right, whatever. So builders' cheap mortgages are a bad deal. Again, I think this is because they're going to talk about pumping up the prices. Hidden costs off. Come on, dude. Yeah, it's like, all right, I don't have to read the article anymore. The hidden cost is inflated home values and undervalued loans. I'll skim it because they're right. Cheap loans are probably inflating property values. Absolutely. That is correct. Correct. Oh, I was doing the, it's the funniest thing ever. I went out to make a coffee. I mean, to me, it's funny. Did anybody ever watch The Sopranos? Like, can I get a thumbs up for Sopranos or like W for Sopranos? Sopranos, best show ever. And highly recommend watching it, even if you've never seen it and like, I don't know, maybe you're younger or you've just never seen it. Totally worth watching the whole thing. Amazing. But anyway, Sopranos, they have this famous sort of like and they've got all the compilations of like that Italian, So anyway, I go out, Jack says something with an attitude, and then I'm like, and then literally the twins and Jay, not Ella and Claire, but the twins and Jay look and they're like, I'm like, this is great. This is great. Like, definitely a W. Oh, y'all agree. That's awesome. Yeah. So I was just like seeing these little like 18-month-old babies go, like, oh my gosh, this is great. This is great. Love Junior, nice, yeah. So freaking love it. Almost makes me want to go back and watch. We're watching Walking Dead right now, and we're really slow at watching shows because I usually fall asleep. But the risk is that owners pay an inflated price, soon find themselves underwater. Yes, especially in high-built areas. Newly built homes can be clustered in areas with plenty of new homes, exacerbating the problem. Honestly, kind of right. Yeah, the concentration of those is true. Oh, dude, I wish I had the Meta glasses on for that. You're right. Those are the moments that are like the clutch moments. You just always got to have your Meta glasses on for them. But, you know, I got to walk out for coffee. I don't put them on. And it's funny, too, because I put a sticky note on my door, put Meta glasses on for that reason. I just didn't listen to myself. That's common. All right. Let's see. Oh, my Lord. Of the roughly 28,000 FHA loans that Lennar originated over a 2-year period, 27% are now underwater. Yeah, I mean, you're probably underwater day one, you know? So, but anyway, look at this. Was this it? I think this was it. Yeah. This was me with the kiddos yesterday and had the Meta glasses on. And I mean, just this, it's so ridiculously cute. It's not that it's the best quality. It's that you get the angle, you get this sort of experience. And I'm not trying to shill the Meta glasses, but here, take just a short glance at this. I think it's so cool. It's just ridiculous. It's so cute. I can't handle it. Look at this little army we got. So anyway, all right. Dude, this is insane. Look at this, dude. Of the roughly 28,300 FHA loans that Lennar originated over a 2-year period, that's tracked by Ginnie Mae's database, who ends up, securitizing the FHA loans, 27% are underwater. Holy smokes. Somebody's like, stock market tanking and bro showing family pictures. I'm sorry. It's like the house is on fire and I'm walking up to the firefighters going, hey, look at my babes. Freaking zoo in there. Yeah. It is a zoo. Don't show Donald that video. Why? When Donald doesn't like kids? Or so let's see here. Dude, he also figures that of the 55,000 FHA mortgages issued by D.R. Horton, 18% owe more than their mortgage is worth. So this is extremely likely, okay? So you have to understand this for a moment. How do I want to explain this? Okay, all right. Here's what happens. The easiest way to explain this. Somebody says, first time I've derailed Kevin. I know, it can happen. I get distracted. So here's what happens. Let's say you want a, 3-bed, 2-bath house in, in X zip code. The 1337 zip code. There you go, okay? You look at homes and get pre-approved. Everything, that you look at is like 60s, 70s, 80s, 90s. You're like, ugh. Gotta remodel, dated, smelly, and older hoods, right? Older neighborhoods. Okay. Then, all selling for, let's say, $450,000. Then you walk into a Lennar neighborhood, and for $499, you can get brand new construction and a 2.99% rate paid down by the builder. Okay? That's not where it stops. Okay? The problem that happens next is people go in and they're like, holy crap, honey, we can get this beautiful new home for, you know, a low rate and, you know, and it's brand new construction. So we don't have to worry. It's like worry-free, no renovation. No renovation needed. You know, it's a pain in the ass. That's why House Hack can make money on renovating homes, because it's a pain in the damn ass. Dude, I'll make a video on this, but like a kitchen that I didn't think I'd need to tear out, I think I have to tear out. Like in construction, it is a pain in the frickin' butt what you have to deal with. I'll make a separate video on that. But, you know, low rate. And then you know what the worst part is? The worst part is you go in with 3.5% down. This is the danger. I always say with 3% down, 3.5% down, you need to buy a wedge. You end up buying an opposite wedge, okay? A negative wedge. Why? Because guess what they end up doing? Finance your floor upgrades. Finance your counter upgrades. Finance crown molding, okay? So you go finance, now you buy a $550,000 house because you blew all this money in the design center on bullshit. And now you have a loan of $550 times 0.965, okay, $530,000 loan, and 3-bed, 2-bath homes in your zip code are selling for, drum roll, $450,000, you know, in the resale market, which means all of a sudden you are underwater to the tune of 530 equals, oops, how am I screwing this up? You're underwater to the tune of, calculator, I think the calculator AI is trash. 450 divided by 530.75. You're underwater by 15%. Dude, that's bad. That's bad. You know? FHA Streamline doesn't require appraisals. I don't think so. I think you're wrong about that. I think FHA Streamlines do desktop appraisals. FHA Streamline desktop, I'm gonna type in desktop appraisal requirement. Let me see if there's one. Oh my God, what is this? HUD announces modification, exterior only appraisal? Oh my Lord. Oh, well, that was a temporary measure. Oh, because of the pandemic. Oh, that was during the pandemic, okay. But I don't know. FHA Streamlined Refinance does not have a loan-to-value limit, so traditional appraisal is not required. That's fine. The traditional, I expect there's not a full appraisal, but I do expect there's like an automated underwriting system. FHA Streamline. Let's see here. FHA Streamline. I'm trying to find something here. FHA. Oh wow, look at that. Refinances are a great way to lower your FHA interest rate. They require no appraisal. Is that true then? Not even the underwritten? That's crazy. No appraisal, no income verification, no credit check. Well, this is probably, the only way this would make sense is if the rate's going down. But that's a little different. But what if values plummet? So, FHA Streamline, I'm a loan office, no appraisal, no income, no credit card. Because it must just be for rate reduction then, huh, Samson? Well, what about like, don't they do the automated valuation system? What are they called? The AV, I don't know. They've got some kind of automated valuation system. Let me see. Does FHA Streamline require automated valuation? Verizon to cut 15,000 jobs? Oh, shit. No. Wow. The AVM. That's it. Automated valuation. Wow. Oh, shit. Good call. Good call. That's very interesting. Huh. Well, at least you could get a rate reduction then, huh? When you still need a appraisal, taking cash out, adding or removing, or significantly increasing the loan amount. Right, okay. All right, okay. Well, that's good. That's good. All right. That's very interesting. I mean, I guess it's just rate reduction, right? I don't know. Good for people. So, okay, let's go back now here. For comparison, Quicken Loans, which does a similar volume of FHA mortgages as D.R. Horton but isn't owned by a builder, has a lower 10% rate of underwater loans. That is a funky way to word that sentence. What is that, written by AI or something? Okay, interesting. Builders resist cut. Yeah, I mean, they might also change the, Verizon to cut 15,000 jobs. Jeez, man. Watch, the stock goes up on that. Let's see. Verizon. Dude, it's so bad. The stock market is so freaking ruthless. So ruthless. This is hilarious. This is like a screen grab right here. Let's see here. Let's annotate that. Giant arrow. Okay. And then we go. Let's do some kind of text here. We're firing 15,000 humans. I mean, am I wrong or am I wrong? Or right? I don't know. Dude, the Mac is freezing. I literally can't save. Look at this. How sad is this? It froze. Preview is literally crashing on this. Dude, short Apple. Bro, what? How? That's crazy. That's crazy. Oh well, what are you gonna do? Oh, dude, the line keeps going up. Should update it anyway. It's so dumb, but it's also just like so classic, stock market, right? That's the way it is. So anyway, okay, so the everything crash, yeah. There we go. All right, let's try again. All right, 15,000 people. We're firing 15,000. Yeah, there we go. Okay, and then we'll keep going here. We'll keep saying. There we go. We're firing 15,000 humans. It's crazy, dude. It's just a crazy world that we live in. Because people just see it as an expense, as 15,000 humans. Verizon stock rockets while market is crashing as they say they're firing 15,000 humans, workers. That's crazy. There's a problem in that, actually. If you think about this, I just tweeted it, I kind of had to. But if you think about it, it's actually kind of a problem. Verizon stock rockets while market is crashing as they say they're firing 15,000 workers. The problem with this is that's the kind of crap that motivates more firings, right? Think about that for a moment. Like, if everybody sees that Verizon is making money off of firing people and the stock is going up, what do you think other companies are gonna do? So I'm gonna write this. I hate to say it, but when Verizon stock rockets on firing 15,000 people while the rest of the market is falling, it will motivate other companies to fire people. It's a bad trend. That's how the cycle begins, right? That's the cycle. Earnings, revenue down, fire people to increase EPS, stock goes up, motivates more firing and other companies to fire. Eventually, so many people fired, you're in a recession, revenue down, EPS down. It's like this crazy cycle. So it's, it's kind of wild. Anyway. All right, where were we? Dude, the Q's just destroyed 617. Tesla's almost down 6%. Well, I'm glad I raised some cash yesterday. Damn. Good. And remember, if you join the Alpha Report, you get the buy-sell alerts too. I was bearish this morning. I'm like, boys and girls, remember, when the government reopens, we go bearish. Yeah. Let's go see. Okay, so continuing with this. Builders resist home cutting prices outright because it's cheaper for them to buy mortgages. It's actually more than this. It's you have to remember how homes are sold. People always forget this. I talked about this when I was in Mexico. I don't know if you saw the video, but you know, phase 1, phase 2, phase 3, phase 4, phase 5. If you're selling phase 1 at $499, what do you think phase 2 and 3 and 4 and 5 are gonna sell for? If they sell for less, the builders are screwed. It's crazy. Somebody here writes, question, I owe $380,000. House is worth $750,000. Need a few remodeling jobs done. How should I utilize my equity? All right, how about this? Send me pictures of your remodeling job and I will roast them, okay? All right, and I'll tell you if you actually need to remodel. Maybe you do. But if you have the balls, send me pictures of your remodeling that you need to do, because that money is burning a hole in your pocket, to staff@meetkevin.com. Go ahead, send me pictures, staff@meetkevin.com, and then we'll see if you need to remodel. Say a builder has a house on the market for 400K and selling, they can slash the price by 10% and take a hit on their top line. Oh, that's true. It also affects their top line. And so they want to show the revenue increases. Short builders. Avoiding deep price cuts is important to protect the value of all homes in the newly built neighborhood. Correct. And they show that revenue increase. Wow. So no data has come out yet, as far as I'm aware. I've been watching for news, but no data yet. This sell-off is because of fear of data. The fear of what's coming. They're coming. Yeah, which that's kind of like Plants vs. Zombies. Did anybody ever play Plants vs. Zombies? So at the same time, financial resilience of a subset of borrowers has been weakening as people stretch to afford a home. Last year, nearly 2/3 of FHA borrowers had a monthly mortgage payment that consumed 43% of the pre-tax. Yep. Okay. Wait, what's the percentage? Last year, nearly 2/3 of FHA borrowers had a payment that consumed more than 43%. Yeah, I mean, that's pretty elevated. Wow, look at the skyrocketing. It's gotten worse. It's stabilizing there around that nearly 2/3 level. Wow. Somebody says, Kevin, is House Hack fundraising ending Q1 of 26? We expect to lower or end our fundraise when Jerome Powell freaks out. You know, so if this data comes in crap and the market like really poops the bed and rates plummet, there's no reason for us to, you know, commit to a 5% yield, you know, through conversion on the bonds. So yeah, we would end that. But you could read all about that at reinvest.co or househack.com, same thing. Even Meadow went red. Yeah, you're right.
Lost the lead.
Wow.
They don't know what the fuck they're doing.
Yeah.
Fetch me. Betrayal.
You are not prepared.
Huh. Okay. Somebody says, yo, your live vid isn't even showing on my channels page. Thought you didn't go live today. WTF? Well, sir, or ma'am, you must not have the beautiful innovation of the Meet Kevin app, which you could download for free by going and searching Meet Kevin in your app store, and then you can customize notifications that you want, such as live stream notifications or Federal Reserve video notifications. And then you don't have to rely on YouTube, and you can get it for free, customize it. Like literally, you could download the app one time, customize it, and say, I just want to know when Kevin's live, or I just want to know when Kevin talks about the Fed. Or maybe you're one of those weirdos who's like, I only want to see Kevin's pilot videos. Not really, weirdo, I love you too. But yeah, you could customize that. You know, the vast majority of you are gonna be like, I'm gonna turn those pilot videos off. I don't give a shit. How do you know somebody's a pilot? They're gonna tell you. Anyway. Oh, man. So, what is this? $20. Highly recommend joining me, Kevin, if you're serious about your finances. You'll learn valuable strategies to both grow your income and preserving your wealth. Man, that reads like an ad. That's really nice, but I swear people are going to read that and be like, bro, that guy's paid. That was really nice of you. You know, YouTube doesn't let you pin these things. I thought that was very interesting. Like, I don't think there's a way to, like, pin the comment, because that's really nice. You spent $20 to pitch my crap. I really appreciate that. I mean, that's very nice. But anyway, okay. Okay, so a sturdy September jobs print will put a floor under the dollar. Markets are bracing for weak economic data as the government finally ended its longest shutdown on record. The risk is that the sturdy jobs report for September, albeit very lagged, may cause a reset in Fed expectations in the immediate run. Okay. So basically, if the September print is good, then you could unprice Fed cuts. I mean, that's interesting. Let's write this down. So, think about this. Okay. Flip side. So let's write this down. Flip side. Okay. If labor good, right? If job data good and really positive for September, rate cut expectations get cut. Okay. October may be seen as weak due to shutdown, right? And November is still weeks away from getting that data. Huh, interesting. That's because you're the GOAT. You're calling a lot right, thinking of signing up to the program because it will save me money. Oh, well, thank you. I appreciate that, Mr. Metaphorical. Oh, I see what you did there. That's a good one. Why would Fannie Mae drop credit score minimum if people weren't in the shitter? Touche. Yeah. That's not good. Paid promotion, right? Yeah, I swear, sometimes, like, it's so good, that's such a nice comment, it's almost like it's too good.
Paid promotion.
Link to the app, please. I actually, if you go to meetkevin.com/data, I know this is like a link to a link, right? Meetkevin.com/data. But if you go to meetkevin.com/data and you scroll down, I put useful links. I think it's in here somewhere. Here, the Meet Kevin app. There's the Apple App Store link, and then there's the Google Play link. So meetkevin.com/data. Somebody here writes, Meet Kevin news over every other media. I'm up over 100% since mid-October on quantum short ETFs. Dear Lord, what a hit this year. Dude, congrats, man. That's all. I know I've been pretty bearish. But good, dude, that's awesome. Oh, I can heart it and I can like it. Oh, that's cool. YouTube keeps coming out with all this new information here. How do you get the Alpha Report only? You can't like stand alone the Alpha Report. It's the Meet Kevin membership, right? So the Meet Kevin membership is all the 8 courses. If I make a new course, you get that as well. You're guaranteed the lowest price on it. You get trade alerts. You get the private live streams in the mornings. You know, all this historical content or new course content or whatever. It's just, you know, we had so many courses that people are like, man, you should just have like one thing that like encompasses everything. And so that's what we did. We call it the Meet Kevin membership, which is kind of cool. All right. So anyway, Qs are slowing their descent, which is nice. All right, let's go back to, this is the builder piece. Oh, let's see what the Wall Street Journal comments are. Those are always the best. Most liked. So if rate sweeteners from builders increase home values above what they should be, then what did a decade of 2 to 3% government subsidized rates do? All right. Well, this is, I actually disagree with that. 2 to 3% rates were because of the market. Low growth market. Not a subsidization or subsidization. Somebody says Alpha Report used to be free. Well, The Alpha Report, originally when we launched it, we wanted to do a short little trial to see if people liked it, right? So we did this really broad, like, hey, we don't know how long, we're gonna keep it free, but if you wanna sign up, you get it for free. So we did it for, I think, 100 days, for free. And then we're like, why don't we just combine the Alpha Report with all of the courses and you get one thing in one price. So that's what happened. But yeah, we did 100 days for free just to trial it, to see. And people really liked it. So that's why we do more of it now. Thanks to the government, as usual, for ruining a market. Now they want to do it again by lowering rates and having a 50-year loan. Okay, think about this. You buy a car, drive it off the lot, immediately you're underwater. People have been brainwashed to think they must make a return on every large purchase. Real estate is a long game, plus you have to live somewhere. Don't overthink it. Right. I mean, that's well said, too. Having arm's length sale is critical for proper valuation. This is not an arm's length sale. That's true. That's true. New construction, is a poopy doopsies. It honestly, like, if you think about it, this is probably the greatest thing to go buy if there's a foreclosure wave of new construction homes in, like, Texas or Florida. I mean, I want you to think about this for a moment. Like, if somebody bought a home that was built in 2018 to 25, and then in, like, 2029, there's a foreclosure wave of new construction homes, those are 10-year-old homes that you can now pick up for a fraction of what they originally sold for. That's a steal. You want to buy that stuff, man. That's a nice opportunity, honestly, because now you don't have an old home that you have to renovate. I'd rather renovate a new home any day. House Hack just bought a fixer upper from like 2008, and I think we got a smoking hot deal on it. But I'm looking at it, I'm like, dude, this is easy. This is a 2008 property, It's like, how much work does it really need? I'm like, hey, you gotta go replace some face plates, boys and girls. That's great. So new build foreclosures, like, you should put a little sticky note on your wall. Maybe you're not watching me in 4 years or whatever, but if there's one thing, I mean, hopefully you are, but if there's one thing you remember, new build foreclosures are probably the best thing you could possibly get your hand on. Okay. So what do they think the jobs data is going to be for September? Let's go look at some of those forecasts for the jobs data. Because if the jobs data is good for 3 months, you could then confirm a soft landing, which would be very nice. I hope so. I don't want to see. Holy shit. Tesla develops support for Apple CarPlay in long requested move. No way, dude. Dude, that's... Like, I have been begging for CarPlay in Teslas. That's awesome, if that's true. Wow, yeah, a lot of people are talking about it now. Let's write that down. Tesla to add support for CarPlay. Apple CarPlay. Wow. That's great. I mean, I would love that as a software update. It's so funny. I was actually driving the Sprinter van yesterday, and I texted Lauren. Did I? No, I called her. Oh, darn. Yeah, I was like, dude, this freaking CarPlay is awesome. Because the Sprinter van has CarPlay. And I'm like, why does the Tesla not have CarPlay? And I was like, this is great. I want to drive the Sprinter van more. Anyway, that's cool. All right, what else do we have here? So we talked about the builders. Soaring profits have an ugly underside. OpenAI losses. There's talk about like this OpenAI slowdown. So OpenAI user growth slowdown. Yeah, this was talked about a bit ago. The mobile app is experiencing a slowdown in global download growth, with projections indicating a decline in October. Data suggests leveling off daily active users, potentially due to increased competition. That's why you're seeing the advertisers. Okay, let me see jobs data here. Actually, can't really see it. I guess maybe if I go back to like 01 or October 10th. No, October 1st. I can't. Oh yeah, I can. All right, so jobs data for October. Oh, they got rid of it. Did they? See, that would be nice to know. Weekly unemployment claims, jobless claims. Oh, they just removed it. Okay, well, what about at the beginning of November? ADP employment report. Employment cost index. Jobless claims. Yeah, I'm not just all delayed by... Darn. So how am I supposed to see what the estimate is? Well, that's a bummer. All right, well, whatever. Somebody says, I canceled my GPT subscription yesterday. The app is trash, slow, context window sucks. That's interesting. Somebody doesn't like it. I've really been liking Gemini, honestly. So, anyway. You want to see my monitor? Bro, you asking to see a man's monitor? Sure, I don't care. And then we gotta look at this. This is my giant mess over here. All right. Let's see what we got here. AirDrop. You can see this mess. That's a big mess. Big pee-pee mess. And we gotta look at the data. So, there's a lot going on here, as you can see. So, we've got, this is the window that we're looking at. Here's my stream. Here's my other streams, so I can monitor them. We've got data, soundboard, emoji buttons. See, I've got the little emoji buttons too. Like, you want to see what happens when I press that button right there?
Little PP.
How about this one?
Poopy doopy.
Anyway, yeah. All right, so where were we? We're right here. GPT's mobile app is experiencing a slowdown. Read more. Okay. GPT's app may be losing steam with new data from the App Intelligence Apptopia showing a slowdown in global demand growth. According to the analytics, user growth measured by month-over-month change data has been decelerating and is projected to decline by 8% in October. And that was sort of in addition to the CFO now talking about that somewhat too. Oh, Times of India is crashing? I guess so. I feel like that's happened before. But anyway, all right. So let's see what the journal's got for us. Stocks to watch today. Diz. Oh, yeah. How's Disney doing? Mixed results. Are they really down 9%, dude? Holy crap. No way, dude. Holy smokes. I don't own Disney, but holy smokes, bro. 9% on Disney? Wow. That's interesting. Do they pay a div? 1% dividend yield. Wow. Okay, all right. Well, I only have 2 keyboards. 'Cause I have a KVM, but you have to remember I have 4 computers here, right? So I have 2 because sometimes I need to move my mouse. Oh, Elon Musk says the CNBC report that XAI has raised $15 billion is false. Of course. But yeah, sometimes I need to work on a different computer and then I just move my hand to our sticks so I can work 2 computers at the same time. I also have a left-handed mouse, which is kind of cool. Okay. Wow, dude, Diz got smoked. All right. Let's open up some more news. I want to see the information, see if they've got any, if they're talking about this Elon thing. Elon. Lyft investors are enjoying the ride. Yeah, Lyft has been rising recently. I still am convinced that Tesla should buy Lyft. Which monitor has World of Warcraft? Hey. That's on a different tab, bro. I gotta farm my ore, bro. Why NVIDIA keeps backing would-be competitors? I mean, it should be obvious. Waymo speeds up. Disney reports slump in entertainment profits. Google goes live with more AI shopping features. Okay, this is all boring. Boring. Okay, so we got the housing piece is interesting. Obviously, the market is a little wild. The 2's10 spread is at 51. Not the biggest deal. Gold, how's gold doing? Should be going up. Oh, wow, it's flat. That's crazy. Okay. Then I've got, yeah, Bitcoin loss is under 101. The 10-year yield is actually up, which kind of implies to some extent that, you know, markets might actually think this jobs report could be good. I wonder if the betting markets have a bet for this. Let's try Polymarket. Let's go see. Polymarket jobs report. Number of Fed jobs, no. Jobs, no. BLS, labor. Come on, bro. Dude, Polymarket, what the hell? This should be such an easy thing. Kalshi betting. Let's try over here. Like presidential election, football, Fed decision, kind of fitty. Let's try jobs. Jobs numbers this month. Above 0 or above 100,000. That's a stupid thing. Tech layoffs. What about BLS? And it doesn't even say which month. CPI in November. Unemployment in November. How high will unemployment go before 2030? Oh, that's interesting. Holy smokes. Dude, look at those bets. What the hell? How much money is on this? Oh, nothing. Oh, there's like no money on this. Okay. I was gonna say, like, this is crazy. But there's $2,000 of volume on this. This is an interesting betting chart, though. How high will unemployment get before 2030? And, you know, you have, it's interesting because these don't stack up. But you actually have 50% of the value over 8%. Third over 10%. Wow. All right, let's listen to this for a moment. I really got to hit the restroom. I'll be right back.
Partner at Accel.
And then we got to talk more about what's going on in the market.
Firm's latest AI report published, which suggests there is still more room in AI spending. He joins us now. So, bluntly, is there a bubble?
Well, I mean, this is the question. I think it's interesting to put that in context. So if you look at the NASDAQ in the past 15 years, like with every platform shift, which is every 5 years, so you had mobile, cloud, and AI, the NASDAQ has doubled. So basically where we are right now, where the NASDAQ is basically in line with historical trends. So yes, with every platform shift, you know, you're seeing frothy valuation, and we're clearly seeing that with AI. And not all companies are going to be winners, but we're seeing tremendous opportunities here for value creation, and we think that the winners are going to take a large share of that value creation. So it's all about picking the right companies.
Well, if we look at the public markets, the winners have been clear, and you call them as the Super Six that have really been generating real cash. That was something that Chuck Robbins just said to us. Look, my biggest demand has been coming from the hyperscalers, and they're pretty good for the money. But then in the private markets, all winning bets have sort of been on a certain few names, OpenAI, for example, Philippe. Where else, though, are you seeing the money being allocated to, particularly in Europe?
Yeah, I think it's worth looking at where the venture funding is going in terms of, you know, cloud and AI. I mean, the total for Europe and Israel and the US is about $184 billion for this year. 60% of that is going into the models, so that's OpenAI, Anthropic, X. But the rest, 40%, is going into a new generation of AI native application that are growing very, very fast and that are very exciting. So you have the Cursor, the Perplexity, the Decagon in the US, you have the Sierra, the Lovable, NA10, and Synthesia in Europe. And what's very interesting here is that if you look at the model side, yes, the vast majority of the funding is going into US company. But if you look at
Boring.
the AI native applications,
Bro, I'm listening to this and I'm just shaking my head like, bro, everybody's gonna get bored out of their mind on this. Sorry. All right. All right, what do we got going on here? Q's, smidge of a recovery on NVIDIA, the Q's. I mean, it's just slow. Really, really slow right now. Rough day. Makes sense with data nervousness. But let's go see if the doomers have anything interesting to say about it. So we looked at Atlanta Fed GDP. The FHA situation's a complete disaster. You've got... Oh, yeah, here. What is this? Soaring profits. Okay. But much of the AI-related profits come from being a supplier to or investor in private companies building out the stuff behind the large language models. And they're losing money as fast as they can raise it. Right. Well, this is also why you're seeing now this, Elon Musk backlash. Like, Elon doesn't want to come across as having to raise money. That's just something to remember about Elon. So this Elon Musk $15 billion raise is, let's see, 15 is what he's denying now. I think it was a CNBC report. And then we have, okay. And then of course you have this slowing user growth report, which I'll use TeleCrunch instead of the other one. This was a report from last month, and we covered it then too. Oh yeah, see, it's already highlighted. That's great. I love that. It saves the highlights. But anyway, this $15 billion. Let's see here. What is this? An hour ago, which of course Elon's now denied. I want to see his tweet. XAI raises $15 billion, adding to its $10 billion round, $200 billion valuation, primarily for GPUs. Oh yeah, that's right. And the vote didn't go through for Tesla to invest in XAI. So it kind of makes sense that they would have to raise money again because, XAI, I think, is burning a crap load of money to try to compete with GPT and Copilot and otherwise. Let me see here. GPT users versus Copilot. There's a chart, and it's not even close. If I could find the darn thing. I think Bloomberg has it. Bloomberg, OpenAI versus Copilot versus Claude users. If I could find it inside the rival. I mean, I know there's a rivalry. But anyway, GPT dominates. They're at the top. So the fact that their growth is slowing down is not that big of a surprise. That's for oh, here we go. Okay, this is Gemini number 2. I think the updated numbers are a little larger for... I think this is still old. This is probably 3 or 4 months old at this point. Let me see. Yeah, July, exactly. So the new numbers are relatively the same though, but what's interesting is you just don't even see Grok in here, right? And so they're raising money as if they're these competitors and you just don't see them in chatbot downloads. Chatbot download chart, Bloomberg. There is a new... whatever. Okay, so this is... Let's go look at Elon denying it. Elon Musk. Bring Elana back. So where does he say it's fake? It's probably a reply. So you have to go to replies. That was 8 hours ago. 7 hours ago. Oh, here we go. XAI raised $15 billion per CNBC. False. Oh, that's all. That's it. So verbose as to his explanation. The thing is, Elon will do this where if it was $14.9 billion that he raised, or $13 billion, or the number was even slightly wrong, or maybe it was even more, right? Maybe they raised more. he won't give you the context. He'll just say false. And it's really designed to make the mainstream media look like crap because he kind of uses it as an ad to promote X, because he wants Grokpedia to win. He wants people to use X as their form of truth. It's a little like Truth Socially. It's so often a lot of context is missing when Elon denies these reports because Elon's done this before. Like we've seen it with the canceling of the Model 2. Reuters is like, oh, the Model 2 is dead. And Elon's like, false, they're a scam. They should be sued for, whatever. And then it turns out to be true. And then it's like, okay, well then who's the liar in that case? Now, I'm not trying to call Elon a liar, but I'm just saying it's important to understand when we see these things. He could be saying false because he borrowed more, right? It's kind of a weird thing to think of. But, okay. So if we look here, this was the daily active user growth declining. This was the report. I wonder what it was based on. Probably just based on, insiders or whatever. Did they have it? CNBC. Sources tell CNBC that much of xAI's war chest will flow directly into GPUs. More votes against it at Tesla to invest in xAI. I actually, when I talked about Tesla in videos, I said I don't think people should vote for it because I think you're throwing good money at Tesla into a money-losing venture for now. Keep these things separate. Let xAI IPO itself if they want the funding. There's nothing stopping Elon from IPOing xAI. If you really wanted to raise money, if you really wanted retail to invest in it, don't do it through a profitable vehicle like Tesla. Go IPO. But you won't because you don't want people to see the financials. And I'm not trying to bag on Elon for saying, oh, he doesn't want people to see the financials. You don't want to see the financials of OpenAI either. Like if the numbers were great, they'd be going public, dude. But we don't get to see their numbers because the numbers aren't great. Let's see here. I also wouldn't be surprised if it's hard to raise this sort of money right now. $15 billion raise signals that the AI funding phrase shows no signs of slowing. Yeah, we'll see about that. See if it actually goes through. We shall see. Disney Plus plans AI video creation tools for users. Well, how does Disney Plus help users? Bob Iger announces AI integration for Disney Plus with user-generated content. Disney dropped a bombshell that could reshape streaming. Bob Iger revealed during Thursday's earnings call that they're planning to let users create and consume AI videos on the platform. That's interesting. So like make Mickey Mouse do this for my child? I mean, that could actually be kind of smart. Bob Iger revealed integrating AI-powered video creation tools, allowing users to both create and consume short-form AI content. Now, how is this different from just using like GPT to do that or Google VO or whatever? Didn't say how they would work. Potentially competing with Sora. Okay. Interesting. Okay, so then this is the big problem here. So this is just the circular nature of it. We already know that. OpenAI and Anthropic are two of the largest suppliers of Gen AI. Okay. What's only starting to be clear are also sinkholes for AI losses that are the flip side of chunks of public companies. Right? I think that's why Apple's at all-time highs. How do you avoid silly errors in math questions now that caused problems for previous versions? Excellent question. Here's how I reduce those errors. Okay. This is into facts, gaping hallucinations, blah, 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 blah. Microsoft, fine, whatever. So, it's actually interesting, like asking the model how it's doing things. But this is the irony of all of this, because we've seen this issue for a very long period of time. Is that the AI don't understand that 5.11 is smaller than 5.9, right? So that's what they're trying to say here, because they look at it as 11 versus 9, But the reality is 5.1, you know, if you got rid of that second place, 5.1 is obviously a lot smaller than 5.9. And here's a big explanation of how GPT-5 is convinced that 5.11 is bigger than 5.90. It's actually kind of funny. All right, interesting. You know, to me, like I mentioned in the video yesterday, this Apple being green and everything else being down is a sign of people getting frustrated about the AI spending. Somebody says Bitcoin's pumping. It's at 100.8. It is not pumping. Pumping down. Yeah. Disney Hub incoming. That's actually an interesting piece of intel. I kind of want to see what they say there. I might pull that up. Let's pull that up really quick. What do y'all think? Top Trump economic advisor says shutdown costs 60,000 jobs. Kevin Hassett. Ooh. Well, maybe that's why they don't want to show the October numbers. All right, let's get Disney's earnings call. Disney earnings call this morning. 5 a.m. transcript. Okay, so that is also, that's worth writing down on our log of data here, that the estimate for jobs, let's put that here, Hassett estimate for jobs, negative 60K in October solely due to shutdown, non-federal job losses. Wow. Q4 GDP may be down 1.5%. That's interesting. That's the annualized, right? That's because of the CBO estimate that he's doing. He's taking the midpoint of the CBO estimate. Yeah, that makes sense. Oh, they're talking about Tesla here.
So hot. What is the most in-demand feature in EVs right now when making purchase decisions? Well, it's Apple CarPlay. People like to walk into their car and have their iPhone interface projected onto their infotainment system. I use it in my car. People are not buying Teslas because of it in some cases. People are buying other cars because of the...
Are people really not buying a Tesla because of Apple CarPlay? I don't buy that, dude. I don't buy that at all. I don't know. I mean, what do you all
the
think?
requests that people have for wanting to buy a new car and hit those one by one to help sales. It's time for Tesla to do that, as good as their infotainment system is. The second thing, of course, is Elon Musk's $1 trillion pay package, which includes some metrics, particularly around selling a certain number of vehicles. And integrating CarPlay could potentially help with that. And so I think this is a good thing for Tesla. They have engineers developing support for this, testing support for this, and we anticipate a rollout, unless it is canceled, of course, which Elon Musk is known to do with some features late in development in the coming months.
Mark, you worked with Ed on this story, and I'm interested as to, well, what is in it for Apple more broadly? Elon, in many ways, had refused to do deals because he didn't want the sharing of data, particularly when Apple was basically building a competitor at one point. Apple backed away from that. And now how do they win by getting CarPlay within a Tesla?
You know, from Apple's perspective, this is something that they don't really have to participate in. There's no agreements behind the scenes. Apple provides this functionality. It provides...
There's no agreements? Bro, fix your grammar. All right, I'm gonna give my take on this Tesla issue here in just a moment. We'll listen in for another moment here.
Buying iPhones, upgrading iPhones, keeping them locked into the ecosystem. So that's the business play for them. And Tesla, right, has over a third of the U.S. EV market. They are a gigantic player in terms of car sales globally as well. And aligning Tesla with the iPhone brand, that's great for Apple, whether they're making money directly on it or not.
Do you think Elon's going to continue to criticize Apple on his X platform and the like?
Oh, I'm sure of it. But, his relationship with Apple has taken a turn since Apple stopped developing its own competitor. He relies on them very heavily now for distribution of Grok and X. So it's pretty critical for him to be on Apple's good side.
Remain on Apple's good side. We'll continue to see how the rollout continues. And if indeed it does happen, as you said, sometimes Elon Musk can be prone to U-turns.
All right, let's start breaking some of this stuff down. So first of all, let's talk about Tesla. All right, so let's do a little sum on Tesla. Tesla stock is absolutely getting whacked today, which comes on the same day that Tesla is announcing the integration, hopefully, of Apple CarPlay into Teslas, which, of course, I anticipate will be very exciting. I'm very excited about it. And will probably come as a software update. No guarantees. We'll see. Maybe Elon will flip-flop on it. But I have to say, yesterday, I drove the Mercedes Sprinter van with Max as we were going to a bunch of house hack properties. And, dude, I mean, first of all, I missed FSD, but Apple CarPlay was clutch. Really like it. I got on the phone with Lauren and I'm like, hey, Lauren, you said the Sprinter doesn't have as many cool doodads as the Tesla, which is true because it doesn't have FSD or whatever. Did you know it had CarPlay? And she's like, oh, I had no idea it had CarPlay. That's great. At least it has something. Because the Sprinter van is kind of like a shell, right? It's not supposed to have all these cool features. It's like a utility vehicle, right? Either cargo van or family van. For us, it's family car. We got 7 kids. Which is why, like, I wish Tesla would make a Sprinter van. Because look, we got the Black X. We got the Cybertruck. We got the Model S Plaid. What else do we don't have a Y or a 3, but we love Teslas. Big fans. So we would love to buy a Tesla Sprinter van. But anyway, so I was talking to Lauren about that yesterday. I'm like, yeah, no, Apple CarPlay is great. It's easy for me to turn on music. I don't have to sync the stupid Bluetooth. It's like much faster than the Tesla. The navigation is integrated much more easily. So I'm kind of excited about Apple CarPlay because it's just an extension almost of your phone. Now, this is great for Tesla users, but what does it mean for Tesla stock? You know, we just had this buddy on Bloomberg who works, I guess, with Ed Ludlow, and he's like, oh, you know, there have been people who haven't been buying Teslas because of CarPlay. Full stop bullshit. Sorry, Mr. Bloomberg. I don't think people don't buy a Tesla because it doesn't have CarPlay. I think, you know, and I've been promoting Tesla since 2017. I think people buy Tesla because of not only like the lifestyle, but that association that you have with full self-driving, safety, sustainability, and fast. I mean, this is like everything you want. Fast car, safe car, energy efficient, like everything about it is like, oh, this is perfect. Like, why would you not buy it, right? And then the full self-driving is world class for the United States. I do think we have a lot of ADAS competition coming with, you know, NVIDIA plays over time, especially what we're seeing in China. Like, we should be really grateful we don't import Chinese cars because there'd be a lot more competition for Tesla, especially with what you're seeing with Xpeng with their robot demo. Like, holy smokes, you all saw that robot demo where it's like, dude, is that robot real? Like, is it a human? And then they unzip it and it's a robot. I'll pull it up and show it in just a moment. But we got to talk about, like, Tesla stock. And so we're going to do that and sort of like trajectories here in the near term. This was the Xpeng robot demo. And dude, people are looking at this like, dude, that's for sure a human in that suit. Cause this is insane. Like, look how smoothly it walks, and they gave it tits. And I'm like, bro, like, can you give guys anything more than they want?
Welcome. Nice to have you. You want to talk about lovemaking, right?
I mean, like, this is amazing. So they're like, the Chinese are really competing hard on robotics versus us. And like, literally in that demo, they go up on the stage. You could see it. They go up on the stage and start like opening it up to prove that it's actually a robot. And it's insane because they knew it was so impressive. If somebody's like, it's just a one-legged actor. Well, actually, in another segment, because I think people thought that, they also ripped open its chest. You know, there's also a demo here where you see it walking as with just its exoskeleton, which is crazy. I mean, then they show it literally in this Terminator style body. This is wild, dude. That hip movement, look at that hip. And I mean, I love looking at hips of robots, of course. Yeah. So, like, that hip move, I mean, never mind. Nobody would look at a hip. Anyway, so the Chinese are kicking butt. The problem is, look, what's the reality for Tesla stock here in the near term? Okay, so let's talk about this. Over the last few weeks, I've made videos on this. You can go back and watch them. I said that the biggest bearish catalyst for Tesla is actually the comp plan passing and then the aftermath. Because see, the most bullish catalyst is the lead-in. This comp plan is going to pass. So what happens? Traders, short-term traders flood into Tesla stock. So the stock pumps up to like a 470 value. Okay. I actually sold a little bit of Tesla stock at like 455 and sent an alert to course members because I'm like, we know what's going to happen after this, the comp plan passes. It's going to go back down to 414. I've been saying it for weeks. You could get the alpha report over at meetkevin.com and you could see my rationalization for this. But my expectation is that at the same time as we're getting all this government nervousness around data, traders are going to exit Tesla and take profits near all-time highs. This is also understandable. People also want to diversify, right? Like you could have been in Tesla since 2017, like some of the shares that I have, and it's like you've got huge gains on them. I just got a message. Also heads up, an investor told me yesterday the reason they invested in HouseHack was because markets are coming off all-time highs and they wanted to diversify into real estate with the gains they had from stocks. Good for them. That was cool. That was an investor in HouseHack or Reinvest, not a solicitation. Read the disclosures over at househack.com or reinvest.co, same company. And it totally makes sense. So a lot of, I think, this short-term price action that you're seeing in Tesla is traders moving out of the stock. And that's actually going to create an opportunity for longer-term investors to increase their Q without worrying about the P, right? Increase quantity without worrying about the P. Now, there is also, though, a realistic problem with Tesla. And so I just want to be real with everybody here. Tesla is fundamentally very expensive right now. We are essentially fully pricing in a robotic and humanoid future. And Tesla is the most pure play investment that you can get into humanoid robotics right now. So I get it. I invested into Apptronic, both myself personally and with the VC firm that we run. And we invested into that as sort of a diversifier play into private market robotics, sort of before what we thought the big robotics boom would be. And so I'm not in disbelief that robots are the future, but Tesla's really your pure play opportunity to go all in on robots in a robotic future, because that's what Elon's telling us, that robotics are the future. So you have to go in here, and in order to justify Tesla at $400, you have to take it, this last one I wrote, I did end of 2030, put in 4 million vehicles, which is still double the vehicles we do today, put in Optimi, put in 2 million Optimus, whatever, at $25,000 a piece, let's call it. Put in 2 million Optimus, and you have to put in a sexy margin here. Let's assume, by the way, that built into the margin for the cars is FSD. So I'm purposefully putting, FSD at 0, because I kind of think in order to get to 4 million cars, just include the FSD. Let that be part of that. And I'm not going to price in Robotaxi right now just so we can see what the numbers look like. But we've gone through these numbers before, right? 4 million cars, 2 million Optimus robots by 2030, we're at a 315 price at a 50 PE ratio. If I do this as a software play, I have to run this as a software play to get to 491. But it's not a software play right now. Now, if we throw in Robotaxi revenues, great, maybe. But I'm always concerned that Robotaxis are going to kind of compress, that you're not going to get a lot of benefit from Robotaxis. I actually still maintain that Tesla should buy Lyft. I don't want to say I'm bearish on Tesla long term, but right now we're losing the trader catalyst, which is, yay, stock plan's gonna pass. Now we go back to fundamentals. And the fundamentals right now aren't great. I don't actually think people are gonna buy Teslas because they have Apple CarPlay. I think it is long needed, and it's needed for Teslas. But I actually think you should buy Lyft. Now, I don't run Tesla, maybe that's a good thing, whatever. But it's a $9 billion company. It's a drop in the bucket for Tesla. Drop in the bucket for Tesla. And I've made this argument for a year now. Okay, Tesla's a $1.1 trillion company. Why would you buy Lyft? Distribution. Tesla can make a great app. I know that. Their software is freaking fire, okay? But what you need is distribution. You need normal, everyday humans that go, oh, I need a taxi. And they open up Uber on their phone and you want to distribute robo-taxis on Uber, on Lyft, why not just buy Lyft and have all of those users yourself? You can now prioritize Tesla robotaxis as you expand. You can increase your expansion much faster. You don't have to get people to download the Tesla robotaxi app and have yet another taxi app. So if you think about it, like if you're at a bar and you're like, I'm drunk, I need to get a taxi, go home or whatever, the first thing you're gonna do is you're gonna go to your reaction. It's probably gonna be Uber. Even though you might know, like not everybody is a big, Tesla fan. Like people aren't watching Tesla videos every day who just want a taxi ride, right? So you pull up Uber and you don't really care if it's a Waymo or a human, you just want to get home. Maybe the next choice is Lyft. But I think Tesla's going to be pretty far down the list in terms of people having that muscle memory of, oh yeah, I want to order a Tesla. Mostly because right now we don't actually have, the market distribution on where these vehicles are. Now, of course, there's a lot of debate. Like yesterday, how do you say her name? Deidre DeBosa or whatever? She was getting absolutely reamed on Tesla because of her comment yesterday about the number of miles that Tesla has driven on, I think I saved it here, I'll pull it up, on autopilot or sort of like full self-driving. And she was getting reamed because people are pissed because they see the rate of change of Tesla's distribution for robotaxis as the game changer, right? Because Tesla is able to expand quickly with a human driver. Now, we're not going to go into like, what's her name? Deidre DeBosa, CNBC. We're not going to get into like a LiDAR comparison or whatever. None of that stuff matters right now. What matters is that we are at a phase of Tesla's cycle. Oh shit, she follows me. No way. Look at that. Deidre Bosa. That's it. I always hear it wrong. But anyway, oh, that's cool. Small world. But anyway, here, I'm just the messenger, she wrote, right? Waymo, fully autonomous miles, 100 million miles. And then Tesla miles with human safety monitor, 1.25 million. Now, obviously, that doesn't include FSD and stuff. But we are just moving in a cycle right now from trade momentum around stock plan to fundies. And fundies are going to take a while to prove. Obviously, this is where people are like shouting out these sort of headlines. Like, here's a headline from 2007, iPhone versus BlackBerry. I had the iPhone 1, by the way. And game changer. Like, the iPhone was such a freaking game changer. And this is why people promote like this rate of change of the robotaxi expansion. I agree. Like, Tesla's going to blow up in service area on all of these. And I actually think they can promote that much faster with Lyft. That's why I think like you not only you can expand the Tesla robotaxi fleet, even with a human safety monitor, nationwide, and get people who want the rides if you own Lyft. Overnight, dude. Overnight freaking game changer, and it's a drop in the bucket for Tesla stock. Tesla investors will probably rally around it, and everybody who owns Lyft would make a big buck. Honestly, I think the cheapest way to get robotaxi exposure right now is probably Lyft. Like, I don't own Lyft. I'm not like trying to pump my bags or anything here. I don't own a single share of Lyft. Like, I own more Tesla than I own Lyft because I own zero Lyft. And Lyft is doing some, fib retracing over here, which is quite nice. It just broke out of the 22 level. It's a very inexpensive company. It's a fraction of the value of Uber because it has also a fraction of the revenue and a fraction of the, distribution. But yeah, I mean, I hate to say it, but in my alpha reports, in the Meet Kevin membership, I was talking about Tesla will be going to 414. I mean, obviously, hashtag no guarantees, but I was like 90% confident we're going to go back to 414 after the share plan. And that's not to be bearish on it. It's just traders get out, okay? This right here is traders getting in. Now traders get out. We could stabilize around 350 again. So, in other words, are there going to be dip buy opportunities? Yes. Part of it is going to be fundamental. Part of it's also just going to be like what happens with the economy. If we get I hate to say it, but if we get a crap show of jobs data that comes out over the next few months, yeah, Tesla's going to get hit as well. So there is a probably near-term window that you're going to be seeing Tesla at a discount. And that is not trying to be long-term bearish Tesla. It's just you're on fundamentals, which are elevated, and you've got government data people are going to be nervous about. So Apple CarPlay is fantastic. Buying Lyft, fantastic. Future of robotaxi, I'm hopeful. I'm not, I like my robotaxi drive. Did you all see Karpathy's tweet on FSD? But if you type in Meet Kevin Robotaxi, you could see the video. It was actually very smooth. When I went through and I did this tour right here, Tesla Robotaxi, this changes everything. This was actually a fantastic experience. And you don't see the whole video because, you know, it was like a 45-minute drive around. But I'm with Ellie, and I'm just chatting with Ellie in the back of the Robotaxi. And, you know, we're just talking about like random things. And she's like, how come you're not nervous that nobody's in the driver's seat? And it's probably just because I've been, you know, trusting in Tesla's autopilot since, you know, 2017. So we're coming up on 8 years of me doing this autopilot stuff. And it's awesome. Like, it's just a really good technology. I'm a really big fan of it. Now, obviously, there are going to be cases that you run into situations. Like, obviously, we had a U-turn there to a police roadblock. But those edge cases are true, too, when I'm driving. You know, it's like, you know you're going to be good on the highway like 99% of the time, and then you come up to those weird turns, and you're like, I'll just drive it here, right? Probably doesn't help the algorithm actually learn. But I'm a big fan of the technology, and I don't think you can poop on it. I just hope Elon really gets into more models. Not women. I think he's got plenty of that going on. But new models. Sprinter van. I don't think the Cybercab is going to be a big seller. I think the Cybercab is a mistake. And not for FSD purposes. Like, if you want to go Cybercab for Robotaxi, great. You know, this is his profile picture right now, his PP on X. And I think that the Cybercab is a mistake for mass production. I think you should be doing a 4-door, 4-seat vehicle, a 2-door, 2-seat vehicle. Only like wealthy people who have money sitting around are going to buy this. And it's not going to be a good selling vehicle or a great selling vehicle. Unfortunately, it would probably be like the Cybertruck, which a Cybertruck is a great car. Like, I will shill the Cybertruck any damn day. It's just not going to sell well. So it sucks. So more models is really what they should be focused on. And I don't know if we're going to get that focus there. Now, Tesla also did vote down the XAI funding, which I actually advocated for. I advocated for voting down the XAI funding. I do not think that Tesla, a public vehicle with great funding, should be investing in a private money-losing enterprise like XAI. Not only do I think you're competing against commodities, there's nothing unique anymore about Grok over Copilot or GPT. Like, they're all converging to the same end. GPT's already seeing their user growth slow down. And so Tesla shareholders, I think, were smart to vote down Tesla investing in XAI. Now, there's this rumor that XAI is raising another $15 billion, which, of course, Elon Musk is saying is false. But he always does this. You know, it's probably because it's more. You know, he might be raising more money. He might be raising $18 billion and he calls it false. Or he's, raised $1 less and he calls it false. You know, he could find any little loophole to say why this is false. He did this with the cancellation of the Model 2, basically, as well, when Reuters was talking about it. So you have to take this with a grain of salt. His comments in terms of why it's false. But I do think that a Tesla should not be investing in a private company that is losing money hand over fist without disclosed financials. Like, if XAI was so great, go public. Then retail could invest directly into XAI. But I don't think Tesla should do that. I think Tesla should take that money, instead of investing in XAI, make a new model, like a Sprinter van. So that's my take. So short term, there's a reason to be bearish, not just economically and data-wise, but, just fundamentally for Tesla. So this is expected. We knew this was coming. We've talked about it on the channel. We talked about it on the Alpha Report. It's not a surprise. And serious investors are going to look at this and go, hey, it'll create an opportunity to buy it cheaper if you're really long-term bullish Tesla. Some people are going to wait until the valuation aligns a little bit more with fundamentals and take it from there. But broadly, this is my take, and I still think they should buy Lyft. So that's my take on what the hell's happening with Tesla.
The second most common question is the U.S. going into a recession?
Oh.
And I know that on the U.S. Recession point, you're concerned that perhaps we might be headed in that direction.
My base case is that we will see a modest recession in 2026. The headwinds for the U.S. economy are just so strong. And the vulnerabilities are that we've only had really 2 drivers, and they could decelerate in the coming year. Jason Furman, Harvard economics professor, did a study on the first half of 2025 GDP growth. 92% of it, he found, could be attributed to the AI CapEx build-out.
Oh, damn.
There's a lot of risk when so much is riding on one catalyst.
All right, Christina, always a pleasure speaking with you. Christina,
Wow, that's a big line there. 92% of earnings potentially associated with the AI boom. Wow.
our markets correspondent, Nora Melinda, for more. Hi, Nora.
Hey, Scarlett. I've got my eyes on Disney. Let's look at shares of Disney tumbling for the worst day of the year. This is after the company gave a forecast that disappointed investors. They're saying that they expect a lot of costs from their big movies that they are rolling out here, Avatar, Zootopia 2, to really weigh on revenue here. So we are seeing traders selling off of this company. And from the world of entertainment, let's move over to technology. I've got my eyes on Apple. Of course, we know this is after there was a deal between some conversations about a deal between Apple and Tesla. This has yet to be confirmed by the company, as it has not responded yet to Bloomberg requests for comment. But according to people familiar here, we are seeing that Tesla may actually consider installing Apple CarPlay in its Tesla vehicles. And of course, we know this is a departure from what Elon Musk has been stating, that he is not interested in Apple CarPlay, despite the fact that a lot of his consumers have really been clamoring for it here. And lastly, let's look at shares of Cisco. We are seeing them on a tear, rising for their highest level since 2025 years ago. We're seeing shares up about 4.6%, and this after the company boosted its 2026 forecast as it continues to capture AI spend.
All right, good stuff. Nora Melinda, Bloomberg's markets correspondent with our individual equity movers. Coming up, we're going to talk about geopolitics. Bloomberg spoke exclusively with Ukraine's President Volodymyr Zelensky on the heels of a new U.S.
Ooh, Zelensky.
I hate the term old economy because both of those companies are using a lot of AI. The companies that are not directly tied to the ups and downs of the narrative around OpenAI are just doing way better. The profitability question does matter. These guys won't stop doing podcasts and letting stupid things slip out of their mouths, guys and gals. People don't want to hear that story anymore for the time being. They don't want to hear that Anthropic won't be profitable till 2028. They don't want to hear that OpenAI won't be profitable till 2030. And they don't want to continue to overload their portfolio on the vendors to those companies. And that's why that rotation is so important for investors to understand. And the most fascinating part about the rotation, it won't show up when you actually look at the index level. What did the S&P 500 do today? Because it's all happening beneath the surface. To Carrie's point, these are segments of the market that have shrunk in terms of their proportion as the Mag 7 trade has grown. And so now you can have like stocks that are, look at Berkshire today. It's $1 trillion market, almost $1 trillion market cap. It's a gigantic.
Dude, it would be my dream to make, Berkshire's actually up today. It would be actually my dream to like make House Hack even just like a little bit of like a Berkshire Hathaway in the long term, you know, where you're like, oh, we're going to acquire a little insurance business and invest the float. That'd be so cool. I mean, those are all like just big, long-term visions, you know, but it's like, that's my 50-year play. Who needs a 5-year time horizon when you could have a 50-year time horizon?
After a couple of years of underperformance, it has come to life and in a big way. As I said, month to date, 6.5% for that.
Next.
Cuts in place. In an email to employees, American Airlines CEO and COO say this: when we get the green light, know this, American is ready. Still, it may take a few days for fully normal controller operations to resume, and we may need to continue to reduce schedules to comply with the FAA's emergency order requirements. The FAA, for its part, is now evaluating the data to see when airlines can get back to their normal flight schedules. Lawmakers are hopeful a Thanksgiving travel debacle has been averted.
We're going to see back to normal operations before Thanksgiving, before the holiday season, and and so I'm very happy with the decision to hold it at 6%. The the operation reduction. So I think it's going to go well.
So, Dagan, the Cliff's Notes version is things are not back to normal just yet, but they are looking up here at this airport today when you look at the boards behind me and at airports across the country. Fingers crossed that everything starts running smoothly again now that the controllers are getting paid and showing back up to work. Dagan?
Thank you so much, Grady Trimble. We want to hear from you, our viewers. So if you have a question or feedback,
I do have a question. All right, so man, it seems like things keep selling off, huh? Just a bearish day. People want the data, man. People are pissed, you know. And this whole idea that all of a sudden we don't have, or we might actually not get certain sets of data. Not great. Okay, so let's see if the Doomers have something else, and then we're gonna go to information and see what else is going on. Just a moment. Okay.
I have to pay.
Oh, Zelensky.
Is this the most significant thing European leaders can do right now to help you?
Of course, we can get more than 140 billion for today. Right. We can get it. By the way, from the United States, it will be also a good signal, you know, like with energy, like sanctions of the White House, of President.
What?
Yes, it's about Lukoil and Ross.
Do y'all think he's going to get the Tomahawks? I think one day he'll get the Tomahawks. I think they'll get the Tomahawks, or at least a few of them. And what they'll do is they'll do a sample. I think they'll end up giving him like a few Tomahawks, and then they'll end up striking deep inside of Russia some of the drone manufacturing facilities. And when they do that, that is when Russia kind of like perk up a little bit and go, oh, damn, bro. And you know, you kind of be like, we're out of Tomahawks, but it'll be like a free sample. You know, that'll be interesting. I don't know. That's my take on that. All right, what else here? Tesla's bobbing around 4 hundos now, 4% down on Nvidia. You got a lot. I mean, everything's selling. Look at that, 9% on Diz, bro. Holy smokes! Even Amazon coming off their highs here now, 258. Microsoft still trending down. Apple even lost the lead. That's surprising.
Lost the lead.
You know, because they've been so immune to this spending. Although Meta's really trying to find a floor, it seems like. Look at this. So, 606, 608. It's right about here, roughly where it sits now. Yeah, 608. We've bounced there multiple times on 608. Let's put a gray line here. Let's put a line. I'll put it right. Yeah, right there is fine. You know, we kind of hit somewhere right around there. Let's make it gray because it's nice and thin and weak. There you go. Sonny says, "What color is my watch band?" Yo, I have to say this is probably like my favorite watch band yet. I call it the reinvest color, you know, because if you go to househack.com or reinvest.co, you know, it's it's kind of matchy, which is kind of cool. So, but no, this is the default watch band for the new Ultra. I skipped the 2, and then I think that's it. Yeah, I think that's it right there. So, yeah, if you wanted to be a consumer, there it is. It's just that default thing. So what do they call that? Alpine Loop? I don't know what they call it. There, Apple Watch Ultra. Yeah, whatever that thing is. So it's just the default thing. I love it. It's actually probably one of my favorite watch bands. If you ever get an Apple Watch, do not get a cloth band if you exercise. So, because like I got a cloth band, I got like a $20 one off Amazon, you know, which is a fraction of the price of what Apple will charge you. And the thing is, you can't really get the sweat out of them once they're in them. Sorry. It's the truth. The truth hurts. That's okay. Michael Burry knows that best. Oh, too soon. Anyway, let's talk about the Epstein files. I'm just kidding. We're not going to talk about the Epstein files. We're going to go look at the Doomers and see what they have. Hold on one second.
JPM, but this Goldman breakout, more M&A.
Oh, they're just still talking about financials?
Better market environment, bull market into the, bull run into the end of the year. Tell me more.
Yeah, I mean, like I just said, financials and healthcare, and as things mature out of April, that's where the road.
All right, that's boring. All right, so we're going to go to the Doomers here and see what they have. Quickly look here, and then we're going to go look for more reporting on if they have any new reporting. And then we're also going to look for data. What is this?
Is extending that war regardless of the fact that it was Russia that started the war.
The U.S., of course, has halted funding, which is why the EU has vowed to step up its financial assistance. But we also know that there are billions in frozen Russian assets in the United States. What is the status of those funds?
Yes, it's very interesting that President Zelensky highlighted this fact. I mean, relative to Europe, there isn't much frozen assets in the US.
No, this is boring. Okay, very well. All right, so let's go to the doomers. Let's see. So we talked Tesla. Tesla. And let's get that in. And then let's go to... Oh, yeah, we got to talk about the housing market, too. Let's see. October jobs report to skip unemployment rate, Hassett says. So we saw that. Where was that Hassett interview? Let's go find it. Hassett. It was probably like CNBC or Fox. Let's see. Fox. It doesn't matter. Let's just see what they say here. Maybe they'll tell us here. So we saw this. It was with Fox News. Of course it was. We'll get the jobs report. We won't get the unemployment rate, and that'll just be for a month. Okay. Fox News. So let's just go straight to Fox News. FAUX News. Oh, it comes right up. No Hassett interview posted. Really? Really, you fart knockers? Fox Business, maybe? Larry Kudlow, corrupt as hell. It hurt everybody. Yeah, interesting. Okay, so they didn't post the video yet. No data collection happened once the shutdown began. We saw that. Statistical agencies are coming back. Report as 2 surveys. That's it. Okay, yeah, there's nothing new there. We already knew all that. Somebody says, my go-to Starbucks just closed. Oh, that sucks. Yo, go to McDonald's now. Go to McDonald's. They give you the 99-cent coffee if you use the app. All right. Isn't that what it is? I'm pretty sure it's 99-cent coffee once a day if you use the app. Okay. Yeah. All right, so stocks. Let's see. Record U.S. government shutdown ends. Congratulations. Shutdown fine. Trump pardons. Don't care. White House orders furloughed workers to return to work Thursday. Larry Summers, Goldman layers slammed in Epstein emails. Apple CarPlay, talked about that. The Verizon layoffs. I wonder if they said why. Why did the layoffs happen? Oh, here's the answer.
It's because that's why.
Oh, okay. Verizon is discussing plans to announce. Oh, so it actually hasn't happened yet. Discussing plans. Wow. The layoffs would not affect the union employees. The plan, aggressive strategy to reclaim market share. Right, we're going to reclaim market share by firing people. Reduction could be 10 to 15,000 people. That's 10 to 15%. Wow. That's actually quite a lot. Oh, and they're going to convert some stores to franchises. Yeah, collect the headline fee and then not have all the underlying risk. Furloughed workers, 600,000 federal employees back to work. Well, coffee shops will boom again. Scaramucci, New Orleans. Hotel bet is likely to end in total loss for clients. Holy smokes, dude. Total loss? Hedge fund investor Anthony Scaramucci's firm. You can see who did it? He worked for Trump 1, right? Let's see. What's his? He was the goal. Let's see. White House comm director. Yeah, President Trump, White House comm director. Oh, that's right. Yeah, he had the 10-day life. He didn't even outlast the lettuce head. Right. Worked at Goldman. Worked for Trump for a minute. Then voiced his support for Biden and Kamala. That's right. And then he got dismissed. Ah, interesting. Never practiced law and went to work for Goldman after grad. Wow. Interesting. Okay, so they think it's going to be a total loss? Hedge fund investor Scaramucci sent a letter to his clients in a so-called Opportunity Zone fund with a sobering message. You're likely facing a total loss. Okay, well, part of that could be because it's going to give people a beautiful tax write-off. So even if that's not entirely true, people can then write it off on their taxes because they could write it down to zero, and then you still have some potential upside. Maybe. I'm just saying, like, but that could be what the motivation there was. I'm not trying to defend the guy either, but the fund's one investment. They made one investment. Virgin Hotels property in New Orleans had already been underwater. But in September, Scaramucci Skybridge Capital learned the asset was valued at less than half of early appraisals. Holy smokes. Wasn't practical to refinance, and the hotel had to be sold. Oh, well, if they sold it for a loss. I don't know. If a property fetches the... It's because they... Oh, because they had to... Wait. But in... Oh, so they took out a bunch of debt on it. Oh, see, that's the danger of debt. Property fetches the broker's estimate of $43 million. Clients will likely suffer a complete loss. Dude, HouseHack should go buy this for pennies on the dollar. The fund is just a small piece of the $2.6 billion that Skybridge managed. It's a black eye for Scaramucci, best known for his 10 days as White House comm director. Wow, assets are down from $9 billion a decade ago. Skybridge declined to comment. Also told investors it would buy back as much of the $6.5 million of the fund shares it had recently sold. Opportunity Zone began talking up Opportunity Zones this year after a short White House stint from Trump's first term. Scaramucci told prospective investors he expected to raise as much as $3 billion for their Opportunity Zone real estate investment trust. He described a wide range of potential investments, a luxury hotel in Oakland, California. Dude, what the Wait, how do those words jive? How do you possibly raise money from people saying I'm going to invest in a luxury hotel in Oakland? There is nobody in California that associates Oakland with luxury. That was the biggest red flag ever. Hey, invest in my fund so I can invest in a luxury hotel in Oakland. You have got to be kidding me. Holy crap, that is dumb. A warehouse in Savannah, Georgia, and middle-income housing. The fund, he said, was expected to generate 8 to 10% in annualized returns even before tax benefits. Yeah, there's your next red flag. Oh my lord, dude. None of that happened. Pulled in less than $50 million, just enough for one investment. The fund never... Somebody writes, you don't go to Oakland if you live in California. Oakland is the scariest place on earth. Oakland ghetto AF. Garbage. Dude, we've considered flying to NorCal. And we've flown to NorCal many times. East Bay, San Francisco. I had a beautiful landing going into San Francisco. I had a twin landing with a Boeing from China. It was amazing. And we were really worried we were going to get knocked out of the sky from their wake turbulence. But it's fine. That's what you train for. Anyway, we're like, hey, landing in Oakland would actually be closer to where we want to drive. We're like, yeah, no, we're not parking the plane in Oakland. Yeah, no, we ain't doing that. We're not doing that. Dude, no. Sorry. The fund never distributed any payouts to REIT shareholders. Even so, Skybridge earned 1.75% of a fee. Yeah. Somebody says, I live in Berkeley and confirm you should not go to Oakland. Let's see here. So, as net asset value 43, bought the REIT. Wow, the guy got screwed. Poor performance caused some tense moments. I wonder if they have any financials. Skybridge Real Estate Investment Trust. Let's see here. Skybridge disclosures. opportunity fund. Okay, here's the prospectus on their, and here's the annual report on their opportunity fund. So these are total investments. Okay, so this is like their total fund, but it's not the opportunity zone. I want just the opportunity zone. I guess you don't really have to look at it. Notice for investors, digital products, late stage equity properties. They've got a lot of different funds, man. All right, whatever. So the guy got screwed making a bet on something he doesn't understand. Somebody goes, the plane would be stripped. Yeah, no kidding. How to support the Oakland economy. Park an expensive asset. I'm sorry. Okay. One client sent a one-sentence email to 2 employees in August asking about the current results of the share sale and how much it would dilute investors. Investors received this response from the president. Given your intemperate and unprofessional communications and false and offensive accusations, we will not be responding to your inquiries anymore. Oh, it sounds like they got mad at, like, you know, somebody being like, yo, why are you guys sucking? Okay. Attempting to find a new lender. Dude, you can't get a new loan. You know, I wonder if I could look this up. Does anybody know where this stupid thing is? This is New Orleans, right? So, Skybridge, New Orleans acquisition. And we'll go back to looking at the markets. I want to find, like, the address of it. See if we could find the address. That would be clutch. New Orleans. Oh, here we go. New Orleans, 13,000 holdings. Develop a hotel. The Virgin Nola. Initially opened in 2021. 14-story, 238-room property. Experiential lifestyle hotel located in the Warehouse District. The Soz REIT. Uh-huh. S-O-Z. Well, there's it. Okay. So, Virgin Nola. Well, let's just look up the address. And then we could find out how much debt they got. Address. Yeah, there it is. Actually listed as a 4-star hotel on Barron Street. It's actually got good reviews. Okay. So now, what I need to do is get into like a title company here. Let me see if I can. And then we'll be able to figure this out. Okay. Let's get logged in here. All right, here we go. Here we go. All right, we're snowballing so far. Let's see if I could do it. This is New Orleans. New Orleans, LA. I always think it's so weird to put LA because I think of Los Angeles. Okay. Okay. Let's see here. I don't care about a cover sheet. Comps, I don't care. Transactions, sure, I'll take that. I want loan. Yeah, document retrieval. That's what I want. No documents for subject property? That's bullshit. Yeah, let's see what I can get. Let's find out. I want to see the loan, baby. Let's see the loan. Show me the money. Show me the money. Lender, no details available. That's a scam. That's a scam. We know there's a loan. We know there's financing. Oh, well. Oh, well. All right. Well, that takes another one out. Broker valued the hotel between 42 and 43 mil. The firm declined the comment. In December, they got a consultant appraisal that said the hotel was worth $94 million. Yikes. All right. Somebody says Uber is going up. Is it? Let's see what's going on here. Meta's still flat. I mean, the market's basically stable in this lower area right here. You know, Qs are trying to come up a little bit. Bitcoin's trying to hold on to 100K. That's impressive. Uber. Trying. Verizon's still up on its firing notice. All right. What else is going on here? Backup in treasury yields. Okay, that's that. Let's see what the Doomers have. Bloomberg. Doomers. What else? Scaramucci. We saw that. Blackstone. Survival rests on funds from allies for Ukraine. I mean, he's been saying that since day one, which totally makes sense. They can't afford this fight on their own. Some smart people are saying AI is in a bubble. Old news. I believe it's a bubble. Oh, this is old. This is an old piece. Old news. All right, let's go see what else. I think The Economist has some stuff. How markets could topple the global economy. Oh, great. 7 deadly sins of corporate exuberance. Oh, great. How Trump is creating his own police force. Man, why is The Economist turning into such a freaking bear? All right, well, let's go look at it. 7 deadly sins of corporate exuberance. And the toppling. Why has it got to be the ski slopes, bro? Dude, oh, you know what would be sick? Is if you had skis that were down arrows like this. Like, I want to put red arrows on my skis, bro. That'd be sick. That's a great idea. I gotta figure out how to do that. I don't want to do it on the paper because it'll melt. I gotta ask Jack to 3D print some down arrows. That's funny. Oh, speaking of which, look at what Jack did. I thought this was hilarious. You tell me what you think of it. Bro, this was scary. Alright, check this out. So, this is literally... Hold on. Actually, you know, hold on. Give me a second here. I'll show you this in a second.
They should compare your company to in terms of valuation, in terms of metrics. So which existing companies are there that you can point to say, like, oh, this might be a benchmark?
You're absolutely right. And that's one of the advantages and disadvantages I think we had when we were looking at our IPO.
Hold on. Let's go over here.
Assets with Robinhood. A very novel approach, Scott.
Dude, the cash delivery announcement is old news. You know, they talked about that a long time ago at their announcement. I actually think it's a great idea. Because if you bank with like a fintech right now, like where are you going to get the cash? You know, that's one of the actual frustrating things right now is where do you get the money from?
All right, you'll do your best stocks in the market when we come back.
That's boring.
May is, I did not read the entire article, but he is responding to this kind of uproar on social media of people bragging about not having kids. But broadly speaking, given my age, nobody ever publicly, until recently, actually talks about what it's like to not have kids. There's just rampant discussion, being in the workplace, rampant discussion about child rearing. It is all
right, whatever. This is boring. Okay, so anyway. Okay. So check this out. This is Jack, my 10-year-old, and he put this on his spelling test, which was crazy. So this is a spelling test, normal, you know, 4th grader spelling test. And he got a 19 out of 20. I was a little pissed. Apparently, he misunderstood that the teacher wanted worn, as in your shirt is worn, rather than warning, like the stock market's going to fall. But he's so focused on stocks that after he finishes his spelling test, he puts together instructions for the teacher. So this right here, it says stocks, smiley face. And if you look right here, he describes bad, then good. Stock bad, then good. Okay, then he draws bad, big sideways consolidation. Then he draws good, up and happy. Then he draws good, then bad. And then over here, for anybody interested in Bitcoin, he fills in the rest of his sheet with Bitcoin at $10 million, but then erases 2 zeros and leaves it at $100,000 for now. But he shows Bitcoin going up in price from 10, 50, 200, 500, 1,000, 100,000, or 10,000. Bitcoin size. Look at that. This is the kid's freaking spelling test. Kid's 10, dude. That's freaking awesome. He showed me, like, Dad, look what I did on my spelling test. I'm like, what the hell is this? It was hilarious. Yeah. Jeez. Anyway. All right. So, what do we got over here? We've got, well, stocks over spelling. Let's go. Yeah. Okay. So, anyway, let's see what The Economist is bitching about here, because they're complaining. Okay. Let's see here. So The Economist is complaining about the economy right here. Just as great cities reflect the genius of their architects, great financial markets reflect the folly of besuited draftsmen. The hell? New ways of raising and spending capital beguile ambitious bosses and propel markets. This time is no different. Silicon Valley, Wall Street, Washington conspiring in one of American capitalism great money-making eras. Greatest, okay, whatever. The value of America's listed companies relative to the size of the economy is the highest it's ever been. So this is the Buffett indicator, right? Yeah. Okay. Wrapped up in the madness, chief executives are embracing 7 risky financial strategies. Oh, this is like the 7, oh, I get it. 7 deadly sins, 7 risky financial strategies. I see what they're saying. Okay. All right. Okay. Let's see what they're calling bearish here. In the meantime, I also want to see, yeah, I mean, we're still stabilizing here. Stabilizing on Tesla, stabilizing on the Qs. You know, the end of the day, I wonder if we'll get a nice, you know, sort of like run into the end of the day. That would be very nice if we could pull that off. But let's go back into the Economist piece here. So, what do we got here? These reflect the obsessions of the market now. Okay, number one deadly sin, the lust for crypto. Trump has promoted crypto. Okay. Second term, corporate America followed. Well, sure, because it's also a way to sort of lean into, like, Trump's favor. Yeah, so this is interesting. So let's see what I have here. Never has something been treated so dismissively in boardrooms and subsequently embraced enthusiastically. Americans' biggest banks and retailers are now considering creating their own stablecoins. Well, I think there's money in these stablecoin networks. Definitely think there's money in this. So I don't think companies are wrong to streamline broker-dealer transactions or whatever with stablecoins at all. Most notable is Strategy, right? MicroStrategy, the leader of the crypto treasury movement, .com darling, and now exists solely to buy Bitcoin. The company owns nearly $70 billion of the stuff, paid aggressively by issuing debt and equity. Yeah, should we talk about STRC in this? Because I have you know, really bad feelings about STRC, and I think it might be worth pointing out some of those risks. So maybe we should talk about that, but I don't know if people care about it. Do I have it up here? Yeah, I have their prospectus. But anyway, all right. So then we have retail envy. Such schemes are designed to appeal to America's retail investors. Some of them will buy anything. Meme stocks are back. Elon Musk has a crowd of retail investors that'll pay him $1 trillion. Palantir, amateur traders, they're saying. Meme world of American Eagle. Hey, don't talk about Sydney Sweeney like a meme, okay? We want to see this blonde, I almost said blue-haired. Blue-eyed, blonde-haired actress. Hey, don't say anything bad about Sydney. After the pandemic era boom, these shell entities' favored retail investors are flooding the market. Okay. Then we've got lazy circularity. When markets soar, so does the tolerance for corporate complexity. Silicon Valley is testing the limits with an AI ecosystem now characterized by circular spending and spiderwebs of cross-holdings. Consider NVIDIA. This is true. Consider NVIDIA, a leading supplier of AI chips, owns stakes in CoreWeave, which buys its chips to rent out to others. And then NVIDIA comes back and backstops, right? Wait, hold on. Let's go to CoreWeave. CoreWeave Investor Relations. Did we get the news yet? Come on, baby! Financials. Oh, no. Only another 144 came through. Wait a sec. Oh, that just updated today, but it has yesterday's date on it. This is a director or officer selling $24 million? Holy crap. Insider dumped, bro. West Clay Capital. Damn, bro. How much are they going to have left? 370 million share. Whoa. They're selling. How do they have number of shares outstanding? Is it $25 million sale? I mean, that number of shares or other units outstanding. That can't be the total that they own. That must be the total of the security, right? I have to look at that. But anyway, that's a massive dump, bro. $25 million of stock. Oh, here it is. Founders shares. What? Founders selling? The YOLO Trust? 10B51 sales for the YOLO Trust. Oh, goodness gracious. Oh, this was all in the last month here. Wow. Those are a lot of sales. Oh, Bitcoin just lost 100K. Ooh, $3.99 on Tesla. Ugh. Oh, the Qs are selling down even more. Growth! I'm gonna have to go get another cup of coffee. I can't cover this anymore. No, let's see what we got. Hey, let me see what Bloomberg's up to. AI demand, Cisco. Dude, I feel like when Cisco's topping, it's almost like a red flag that you're at the top because, you know, .com bubble.
Partnerships with NVIDIA. So yes, when they raise their guidance and you see that they're going to be making $61 billion in revenue for the fiscal full year, $1 billion more than the market thought. When you're seeing earnings per share grow, you know, this isn't double-digit numbers, but it is still 8% growth for the fiscal quarter just gone, and it looks like that's going to be the sustainable level of growth. People like that from a company like Cisco.
And Chuck Robbins was also able to offer some transparency in terms of how he sees AI spending ramping up over the course of the next year. What did he say about that?
Well, I think he's trying to show that not only do they have growth from the key hyperscalers, and look, he made pains to remind us, these people are good for their money. They are awash with cash. They can pay their bills, and we are signing on the key clients there. They got $1.3 billion overall in terms of what they sold into the hyperscalers, and they think it's going to be a $2 billion run rate going forward. But then it's going to be even more when you're looking at the scaling of sovereign AI, when you're looking at other enterprise clients. That's why he says his strength is, look, they've understood how to get companies to be able to access the internet using the networking gear. Well, now companies want to be able to use generative AI, and they need his gear for that as well. So he thinks it's going to sell into enterprises, into sovereign, more broadly, into data centers. That's going to be another area of growth. It was about 200 million. He thinks that can be a $2 billion run rate.
When we talk about AI and, getting in on the AI play, it's very much who you're partnered with or who you have partnerships or deals with. That's the circular financing that concerns some people and reinforces the expectations that there's a lot of growth here for others. You mentioned an NVIDIA partnership. Are there more partnerships on the way?
Well, I think they're saying we can scale from a global perspective here. So NVIDIA is going to be the key technological partner for them, and they're going to be able to offer, therefore, the most refreshed optionality into your data centers. And that's where some of the fear has come in, hasn't it? Michael Burry and the rest saying, look, your chips, your equipment is going to deteriorate faster than you think. So no wonder we suddenly got this rush of companies to try and update with the newest and best types of ways of interconnecting their data centers using what's happening with Chuck Robbins. But he's also talking about the global scale. The fact that they've got partnerships with Humane over in Middle East. He's talking about scaling over there as well. So I think that's where he's starting to think that partnerships come into play.
All right, let's talk about another company, which I know you covered as well in BTech, and that is Disney. The shares are on the move right now. Maybe some disappointment over the latest results. The CFO of Disney, Hugh Johnston, talked about the earnings results. Let's take a listen to how he framed it.
I thought it was a good quarter overall, and frankly, versus Wall Street, we beat expectations by 6 cents. So, as you noted, the experiences business did very, very well. 6% revenue growth, 13% OI growth was terrific. Apples to apples basis. Overall, I thought the quarter was good, and it actually allows us to end the year with a lot of momentum.
All right, he said he thought the quarter was good, but...
Yeah, market disagreed. Whatever. Okay, so... got more coffee. We're ready. We're ready. Okay. So, next. Let's go back to these 7 deadly sins. Okay, so the circular nature of the economy. Okay, enthusiasts say a little different from vendor financing arrangements. Yeah, I mean, it's kind of like financing a car, right? That's fine. Okay, cynics see parallels to round-tripping practices. Such deals. Parallels to round-tripping practices of energy traders and internet firms of the late 90s. Lazy Susans that often offer no goods or services. Right, to hit revenue targets. Well, that's the problem, is like, so far LLMs are just a commodity. We've known that for a long, long, long time. The question is, when do people start caring about that? Every boom is defined by mega mergers. Okay, so what mergers are we talking about now? This month, Kimberly-Clark agreed to pay for Kenvue, biggest consumer products takeover of the decade. Honestly, I think they got a good deal, dude. They got a good deal, man. Like, Kenvue was so cheap, it was great. Debt gluttony. Oh, I agree with this. Oh, somebody said Bitcoin plunging? Oh, no. Oh, no. I mean, it looks like it just tabbed under 100K here. Dude, 7% day on TESS. Wow. Red day, red day. I'm going to make a song out of this. To finance the splurge on data centers, America Inc. is feasting on debt. Right, yes. The off-balance sheet debts, XAI debts, private credit is gaining popularity, but then you get rug pulled on it. Apollo, a private markets colossus, involves making a loan considered by rating agencies to be an equity investment for the recipient, while furnishing the lender's balance sheet with investment-grade debt. One innovation pioneered by Apollo involves making a loan considered to be equity by rating agencies, while furnishing the lender's balance sheet with investment-grade debt. Yeah, it's insane. I don't know how, this is the lack of standards here. It's scary. I don't understand how you can't show the lease obligations Meta has on the Meta balance sheet for, this new $30 billion deal, but whatever. As borrowing increases, it will be further obfuscated patriotic pride, born in America. JP Morgan said it will bankroll companies involved in the security of resiliency to the tune of $1.5 trillion. Right, but this is lending, and you should not trust these damn banks with lending, bro. Don't trust these bastards. Definitely not JP, man. They will be your best friend in the good times, and they'll rug pull you in the bad. That's my take. That's my opinion. Fed's hammock. Oh, hammock's yapping. Service inflation is a big concern. Blah, blah, blah. Inflation's still too high. Okay, whatever. So, America's government now possesses a golden share in U.S. Steel, 10% of Intel, and don't forget MP Material. I think they forgot MP Material. How is MP Material holding up on a day like today? I can't imagine good, because it had a lot of trader momentum. A lot of people made lots of money on it. Nah. So when this, and we talked about this hitting 100 and then coming down, my next target is $31, just to be transparent about it. I think it's going down to 31. And so far, you know, I've been making that call since $100. I mean, we're over halfway there. Just kind of crazy. Crazy. Okay. Bankers say American companies with tangential connections are making deals with the White House. The government backstop thing was so ridiculous. This is a good little, like, you know, top off of information here from The Economist. Avaricious fraud. The final sin of every market is fraud. Yeah, dude, no kidding. Accounting practices are all wobbling. The guardrails are wobbling. Of course. Well, that's why you're seeing the spike in private credit, you know. This is like, you know, that's what everybody always starts alleging. It's like the private credit companies start rug pulling your loans, which leads to the collapse of Tricolor, First Brands. Oh, it's all fraud. You know, that the hotel chain we just saw go out. Sonder Hotels, right? Everybody just points the finger, goes, oh, it's fraud. Judgment Day. Wall Street expects good times to continue. Credit spreads remain tight. Equity volatility is low. Retail investors show no signs of flagging. Last week, Robinhood, an online broker, said its clients' borrowing had risen by 153% this year. Are you kidding me? Holy crap. I didn't know that. Did Robinhood really say that? Let me see if FINRA margin statistics are out. October margin numbers are here. Look at these rates of changes. Can I download this as a spreadsheet? Yeah, I can. I certainly can. Because I want to chart this. Oh my goodness, I haven't done this in a minute. Debit balances. Free cash. Oh, dude, it'd be hilarious to chart the two against each other. Free credit balance. I don't really care about that. All right, so watch this. All right, how far should we go? Let's go all the way. Let's go all the way. Oh, dude, we have all the way to the dot-com bubble. No way. Okay, let's go to 1998. Screw it. Just go all the way, bro. Yeah, let's see if I could do this correctly. So I'll make it a chart. Oh, okay. Now let's try to understand this. Debit balances and free cash. Debit. Why are debit balances going wrong? That can't be right. Debit balances. Is this upside down? Oh, this is the wrong way. Why is the chart backwards? It's because I'm an idiot. And I went from the top. Bro, I don't do spreadsheets on a daily basis, okay? I invest in real estate based on my napkins. You should see my napkins. Okay, where table? Chart. Chartahena. There we go. What? No, what? It's the same shit. I can't do it right. Bro, I want it to go the other way. What the hell? How do I make it go the other way? What am I doing wrong? We go from here up. Can somebody help me reverse this crap? if I do that way, it's backwards. And if I go from here to here, sell. Oh, maybe I could like reverse the dates. Right? I don't know. Chart. This is some bull crap. Inverse. How do I change this shit? Background, order, legend, arrange. Maybe the arrange tab can help me. Align, forward, back. No, that's not gonna do any good. Right click and mirror, brother. What? Right click, show legend, send to back, edit chart data, align, distribute. No, there's no mirror, homie. I could hold up a mirror. Switch around the columns. Really? Like the year? Sort, date, and expand the cells. I could do like that, maybe. Maybe if I just like make this descend. Ascend. Oh, there we go. Hey, we did it, boys and girls. Oh, shit. We know how to use a spreadsheet. Let's go. We did it. All right. So, there we go. All right. So, what do we have here? Let's see. Bro. Let's open this out. Yeah, live chat tech support. So, all right. Now, we're going to do this. We're going to understand this a little bit. So we're going to take a screen grab of this. And so the blue is debit balances, and then the red, no, I want cash, free credit balances, in cash accounts. Okay, yeah, good. In the cash accounts. Okay, so let's do this. Okay. Red, free cash balances, free credit balances in cash. Okay, so basically available cash. All right. And then blue is margin debt. Okay. There we go. That is margin debt. And so now, what do we have here? Let's understand some things. Let's do arrow. And how about we go with orange? There we go. Okay, so this was 2021 peak right here. Let's see. This would be orange. There we go. 2021 peak. And so what we can notice is that in the 2021 peak, people actually had more cash. Look at that. More cash here than we have now, which is crazy because debt is so actually that's actually kind of scary because look at that. You have, how much lower are we? Free cash balance. Well, we could actually find out precisely. Cash balance right now, 197 billion. 197 billion divided by here. 197 billion. Wow, dude. Cash balances from peak of 250. 197. 197, 250. Cash balances are 21% lower. Dude. 21% lower cash than 21 today in these brokerage accounts, right? You know, so could that be because stuff's in money market? I don't know, because people invest in a money market through typically their brokerage account, right? But I guess it could be in like a high yield savings account or whatever. 21% lower cash than 2021 today. So I'll put that like right there. And then margin, on the other hand, peaked at 935, and today it's about 1183 divided by 935, 26% higher margin amount, 26% more debt. That's in nominal amounts, it's in cash, right? But that's an interesting comparison. And it's kind of scary, honestly, dude. Just straight freaking up on margin. Now, was this dip here liberation? That would be interesting. Let's see if that dip was liberation. If I go here, yes. We dipped on liberation. Wow. So, going back to that chart, this was liberation. So we'll say liberation. And then, and what's actually kind of wild is if you look over here at these previous booms, right? Look here, cash and margin up. This is actually, this time is different. Cash and margin went up in the 2001 crash, right? And then over here, you have cash and margin up as well. And then what you actually have here is cash down and margin up. Bro. That's actually very interesting. And I don't like it. So the potential for ridiculous margin calls here is insane. Debt margin. Damn, dude, that's bad. That's a lot of, dude, that's a lot more debt than I thought. That's a lot of debt. And the problem is, dude, people get, you know, the margin call stuff, it just becomes this self-fulfilling cycle, man. It's nasty, dude. Nasty, nasty stuff. Oh, well. One sec. Okay. All right. So then what do we have here?
Your travel system, because we know that that has caused.
No, the number's not. It is a nominal number, in fairness. So, like, yes, I mean, in fairness, we could be at the same peak because of inflation here. This is different, though, right? So why is this peak not at that same level, right? So, you know, technically this should be 30% higher or whatever because of inflation. This is probably similar because of inflation. And it's the rate of change you probably care about here. So I don't think that's inflation adjusted.
There's also going to be a higher withholding rate, so that they may have to wait. Their paychecks may be smaller than anticipated, and they'll get that in a refund next year. So there's not, you know, this is not no one is held completely harmless here. There are, you know, some latent effects that will continue.
Wow, remarkable. So, all right, everybody comes back next week with new vigor. I guess there's going to be a debate over health care, but we still don't have a plan from Republicans, right? So this starts as a debate over extending Obamacare subsidies, or are we starting from scratch? Because we're hearing from Republicans that Obamacare simply makes health care less affordable, and they like the president's idea of sending money directly to people.
This is really going to be a political mess. You have Democrats who don't even know exactly what their ask is. You know, they will kind of get the first move in the Senate to put some bill forward, but in the House and with the
I was probably generous. 25 billion, 30-year bonds. Look at the charts. Yields moving higher. Why? It had a tail of 1 basis point, meaning the when issued market was trading lower than the actual yield at the auction. So if you're the government, you want to have the highest price. Well, higher yield equals a lower price, and that's the problem here. All the other metrics were a bit below average, but nothing huge, basically comping towards August in terms of weakest bid to cover, meaning how many dollars we're chasing every dollar worth of securities.
Yeah, somebody here in the chat says, when financial fraud is rampant, go look at consultants like this, FCN Consulting. I've never heard of this, but that's interesting. There's an idea. Oh, Disney slightly recovered here a little bit. Oh, look at that. Disney's coming back to my 107 line. Rip. Bitcoin right now, 99. Solar Edge, 13%. Oh my gosh. Wait, why? Why is it down that bad? It could only be because of the 800 volt data, bid that people are now nervous about with AI. Interesting. Now that's a big hit. Okay. So, all right, so the margin statistics, those are insane. And then what is this? Let's see what we have here. So this is the skiing one. If America's stock market crashes, it will be one of the most predicted financial implosions in history. I mean, yeah, it's also kind of true. But nobody's believed it because it's just been straight debt, Jeez, man. It's crazy. So okay. Bracing for financial trouble. Central bankers are bracing. Investors who made big names against betting, the Big Short, blah, blah, blah. Okay. And no wonder. Cyclically adjusted. The CAPE ratio. This is Buffett's, valuation metric. Old news. This was interesting. We saw this from JP Morgan. It's insane for companies to achieve a 10%, return on CapEx right here. You need to collectively somehow gather 650 billion of annual AI revenues. It's insane. I can't highlight for some reason. Which we calculated yesterday with the JP Morgan note that it was crazy. It would be over $400 a year from every iPhone user. Okay, that's if you only assume America. Oh, well, no, per year. Okay, no, they multiplied it by 12. Okay, yeah. Okay, because you get about 1.5 billion global iPhone users. Although a market crash would surprise almost nobody, a few have thought about its consequences. That's partly because the chances of a big fall in stock markets bringing about a broad financial crisis are, for now, slim. Unlike the late 2000s, when widespread leverage and complex financial engineering helped cause a debt-fueled bubble in subprime housing, today's AI euphoria has been mostly equity financed. Well, not if you look at margin. What's more, the real economy has shown that it can weather shocks. That's true. Still, it would be a mistake to think that the effect of big stock market losses would stop the wallets of investors. The longer the boom goes on, the more opaque its finances become. And even without financial Armageddon, a dramatic market fall might be the last topple a resilient world economy that would topple the resilient world economy into a downturn. Okay, the root of vulnerability is the American consumer. Interesting. Stocks account for 21% of the country's household wealth, about a quarter as much again as the height of the dot-com boom. Okay, assets related to AI are responsible for nearly half of the increase of Americans' wealth over the past year. Households have become wealthier. They've grown comfortable saving less. Sure, because you throw it all into the markets and make money. A crash would put these trends in reverse. We calculate that a fall in stocks comparable to the dot-com bust would reduce net worth at households by 8%. That's overall, right? For a lot of people, a lot more. That could cause a big retracement in consumer spending. By one rule of thumb, the pullback would amount to 1.6% of GDP, enough to push America, where the labor market is already suffering, into recession. See, that's interesting. They're basically arguing if stocks go down, people will spend less. It's the wealth effect argument. To the tune of 1.6% of GDP, which if GDP is barely growing right now, you know, depending on what it is on an annual basis. Hold on, what's this?
Documented case of an AI-orchestrated cyber attack, a sign that they say of just how fast the threat landscape is shifting. Now, this goes back to September when a Chinese state-backed group used Anthropic's Claude models to automate nearly every step of a global espionage campaign. Now, in this case, hackers jailbroke Claude code by posing as cybersecurity testers. And we know that hackers have long used AI for things like crafting phishing emails or scanning for vulnerabilities, but this was a lot more sophisticated than what we've seen before. You've got Anthropic saying that Claude was handled up to the model itself was handling up to 90% of the attack, with humans only stepping in a few times to approve decisions. So we're talking cyber attacks with the click of a button, Claude essentially writing and deploying exploit code, stealing credentials, exfiltrating sensitive.
Dude, you just use AI to go hack people now.
Reuse later, roughly 30 government and corporate targets were hit. A few intrusions were successful before Anthropic shut it down and alerted authorities. And it is worth noting, Contessa, Anthropic only acknowledged this attack from 2 months ago after the Wall Street Journal broke this news today. Anthropic, they are calling it a turning point where AI has gone from assistant to operator, warning that unless defenders start using the same tools, they risk falling behind.
Now we're going to have to keep a closer eye here on the cybersecurity firms and how they're doing, and also cyber insurance, which is responsible for covering all of these businesses from said attacks. Mackenzie, thank you. Coming up, Nike getting an upgrade to buy at Wells Fargo.
Wow, that's crazy. All right. Hold on a sec. All right. Cool. So, what else? The shock, the weaker American demand would spill over to low-growth Europe and deflationary China. Yeah, that's true. I mean, we would have so much deflation. Like, you could literally print massive amounts of money at the Fed and not have inflation because of the amount of deflation we would have in the global economy if we had a recession. Prices would go down, you know, it'd be a good thing to some extent. I mean, it would suck for stonks, you know. U.S. Department of Homeland Security to announce $10,000 bonuses for TSA agents who continued showing up for the government shutdown. Oh, that's interesting. Wow. That's interesting. Homeland Security to offer up to $10,000 bonuses for TSA agents who continued showing up for work during the shutdown. Wow. That's a big stimmy. What are they going to pay for all that? I mean, I guess how many people is it? Anyway. All right. Okay, so... Look at this. Fed's hammock may soon expand balance sheet again due to technical factors. Yeah, that's not just hammock saying that. A lot of people have been talking about this, and it's basically the Fed going printing again. Now that's interesting. Yeah, Williams talked about that as well. The Fed will soon need to expand its balance sheet for liquidity needs. Right, the money printer. Federal Reserve may soon need to grow its balance sheet through bond purchases. The next step of our balance sheet strategy will be, let's see here. When it happens, it will be time to begin a gradual process to purchase assets. It won't be long until we reach ample reserves, and then we'll have to go to buying. Wow. Well, because of everything that's rolling off, you'll have to keep buying. I mean, they're basically acknowledging that, yeah, we're going to get right back to money printing, right? Could be a heads up on the data coming. I mean, honestly, you mean this face could be a heads up of the data that's coming? Huh. Okay, Bitcoin now 99,000. Foreigners have 18 trillion worth of exposure to American stocks. There would be a mini wealth effect globally. Bro, man, I hate to say it, but days like today make me really grateful I paid off my debt. Even if it means selling some stuff. Like a really big peepee. I liked my peepee. But I also like cash. Good news is that a global recession with its roots in the equity market need not be deep, just as the downturn that followed the dot-com crash was shallow and avoided many economies. Yeah, well, that comes down to the labor market. Downturn would expose vulnerabilities of today's economy. Oh, did I miss part of a message here? D. Brown, what'd you say? Maybe a heads up of the data kind. Oh, Kevin, do you think of the closed-door meeting Trump held with the heads of financial institutions could have something to do with the sell-off? They got spooked. Yeah, who knows? I mean, I wouldn't be surprised if Trump is leaking the data. You know? It wouldn't surprise me at all. Without the AI boom, the American economy would be left looking like it did in spring. Threatened by tariffs, beleaguered. Well, I mean, it actually would be worse. It'd be worse than what it looked like in spring. Because we had AI pumping us up in spring. In recession, America would usually be a haven, but in these circumstances, America taking the worst growth downgrade, with people rushing the dollar would not be assured. Right, because of tariffs. So people won't see the dollar as safety. Although a weaker dollar would be blessed for the rest of the world, it would strengthen the idea of American exceptionalism is not what it was. The risk of the dollar would be especially great given 2026 could bring far greater political influence over the Federal Reserve. Right. A recession will also put indebted governments elsewhere to a stern fiscal test. Imagine going back to austerity in like Europe or something after the sovereign debt crisis over there. Ugh. Most vulnerable economies' fiscal fears might, let's see here, might cause long-term bond yields to stay put or even rise as central banks cut short-term, a dynamic that has occasionally happened over the past 2 years. That's fine. That's what people think until, you know, the poop hits the fan. Final consequences for trade. American spending less would almost certainly reduce the trade deficit, which would please Trump. But the other global trade flashpoint, China's manufacturer or surplus of manufactured goods would worsen. Right, more deflation, right? A glut of Chinese stuff. The Chinese are going to make everything freaking cheap for us. Everything, including stocks. A slowdown in America will cause a glut to swell further, sharpening protectionist backlash. The world may be predicting an American stock market crash. That does not mean it is prepared for the consequences. RIP. All right. Everybody raising cash to spend on Black Friday, right? Dude, the Qs are now down 2%. What the hell? Lost 617 so fast. Damn, bro. What the hell? Look at that, dude. Nvidia's down 4.4. Can't get any support. Tesla 399, 398. Well, hopefully we get a nice, like, dead cat bounce tomorrow, eh? That would be nice. Yeah, what a surprise. The government reopening is bearish. It's actually not a surprise. All right, what else? CoreWeave, MSA. I'll have to do a thorough review of what the hell is going on here. Okay. We have the Verizon layoffs. Yeah, that was crazy. Okay, what else? So, let's see. Verizon layoffs, we saw that. The Scaramucci Fund. That was crazy. We saw... What else? Skybridge property. The New Orleans property. The Verizon layoffs. Okay, got it. Wall Street Journal. They're complaining about AI. Everybody's complaining about AI. Okay. Let's see here. The margin statistics, those were crazy. XAI's funding plans, the soaring. This was... Yeah, this was just yapping about the chatbot sort of problems that we have with... you know how GPT is meant to fix stupid mistakes in math? Even when asked about stupid mistakes on math. It's funny. Blue Skyling. Alright. Let's put that in over here. Fed to print money again. That was wild. Then we had the 7 deadly sins. We saw that. Saw the big mortgages. That was wild. Polymarket Kalshi didn't give us any good insights. Let's see what else. Reuters. U.S. government opens back up. Deep political divisions remain. Regional banks could be the next frontier for Trump pressure. Starbucks walkout. What is this? Seeks the profound over profits? Google's top executive seeks the profound over profits. Okay. OpenAI did so no less using technology first developed by Google researchers in an effort to catch up. Google has suffered embarrassments. Google has rolled out an increasing array of AI offerings. Fine. All right. That's boring. Okay, what do we got over here? 2 Palestinian children killed by Israeli forces in West Bank raid. Sucks. Epstein emails prove nothing. Nice face there on Carolyn. Okay. What else? The BBC, everybody's favorite news station. Okay, Politico. Jeffrey stalls effort to restore bargaining rights for federal workers. Okay, Hakeem. 9 most shocking revelations in the Epstein book. Okay. Larry Summers. Donald is a clown and increasingly dangerous on foreign policies. I observed that half of the IQ in the world was possessed by women without mentioning they are more than 51% of the population. Okay. I'm trying to figure out why American elite think if you murder your baby by beating the abandonment, it must be irrelevant to your admission to Harvard. Do not repeat this insight. Okay. Wolf's advice. These were the emails we saw yesterday. Trump asked me to resign. Never remember. We saw that yesterday. Repeated appearances of another member of the Obama administration, White House counsel Catherine Rumler. Criminal cases against Trump, former Trump attorney Cohen, who admitted to conspiring with Trump. You see, I know how dirty Donald is. Man, these are crazy, huh? In a separate email, Rumler shared her apparent disdain for people of Jersey. Think I'm going to drive, she wrote. I will then stop to pee and get gas at the rest stop on the New Jersey Turnpike. We'll observe all of the people who are at least over 100 pounds overweight. We'll have a mild panic attack as a result of the observation, and we'll then decide I'm not eating another bite of food for the rest of my life for fear of ending up like one of these people. Ouch. Rumler didn't respond to a request for comment. What a surprise. Peter Thiel, can't complain thus far. When Epstein replied, December, visit me in the Caribbean. Wow. Epstein and Bannon. If you're going to play here, you'll have to spend time. Europe by remote doesn't work. Lol. Who's this? Epstein and the Kremlin? Epstein apparently leaned on foreign policy connections. Sergei Lavrov. I think you might suggest to Putin that Lavrov can get insight on talking to me. Epstein wrote in an email to the Prime Minister of Norway. Wow. Epstein has already spoken with the Russia's ambassador to the UN about Trump. Wow, dude. It's so connected. As much of it can be true. Clinton administration. In one email, Upstate shared a news article about James Woolsey, who led the CIA during the Clinton administration. Epstein, a well-known publicist. The girl who accused Prince Andrew. This is some crazy stuff. Sereno. Dude, this goes on. Golly. All right, enough of that. Let's see what the financial... Oh, we just lost 99,000 on Bitcoin. US drew 9... What is this? Wall Street slides. Tech stocks jitter. US drew. Big short investor to close fund. Saw that. Phantom data centers. Muddy forecast. The hell's a phantom data center? That's interesting. I'll look at that. Developers are overstating energy needs. Of course they are. Dude, like, do we really need to just, like, shit on AI even more right now? Now they're saying the energy play is overstated? And that doesn't surprise me. I don't touch energy plays, but I want to read it. U.S. data center developers are flooding utilities with inflated growth plans, muddying efforts to plan with projects that may never materialize. Developers are approaching multiple utilities with the same project in a quest to find the lowest price power, leading to so-called phantom data centers. Right. The plans are being left in a queue of projects. Artificial intelligence boom is fueling the economy, but doubts are mounting over the amount of power data centers will need because of dubious forecasts. Well, because the forecasts are driven by greed, right? That's the thing. The forecasts get driven by greed because everybody wants stocks to go up. Oh, man, Jesus. Oh, my eyes are going to cross at how much negativity there is. Oh, I'm sorry. Bro, it's a sea of red. Oh. Jeez, dude. Everything. Rigotti. Oh, 10%. IonQ, 10%. UPS is green. Simon Property Group. Bro, what the hell? Oh, Seagate. Ethereum. Oh. Ugh. Wow. That's insane. Target. Tesla. All right. Does all the negativity make things bullish? I know, right? It's like, when do you go contrarian? It's sort of like if you're a bear and then you're right, like when do you flip and go bullish? Holy smokes, 121 now on Hood, 9%. Jeez, man. Somebody's asking about Househack. Yeah, Househack's totally unrelated to the stock market. Househack doesn't own $1 of stock or $1 of Bitcoin. It's a cash, baby. Cash and good quality property. It's kind of insane. Like, I really think that that this is a barometer of the stock market, is when our funding skyrockets, it's because people are freaking out about the stock market and they're diversifying into real estate. I'm just looking at it again here. Yeah, I should just put the updated picture up here. That way you could see it yourself. Okay. There it is. So it's like an inverse indicator, you know? When the funding in the Househack funding account skyrockets, you know, I mean, look at this. It's November 13th. And we are on pace for like doubling our best averages over here, right? For funding. It's a sign that people are like, bro, I just need to take some money out of the stock market. It's like an inverse indicator, you know? Hashtag not a solicitation. Read the offering circular at househack.com/reinvest.co. It's the same company. Banks are out of cash to buy assets. I believe it, dude. Totally believe it. Let's see here. Because utilities can recover the cost of new plants and lines through customer rates, concerns have risen that clients will end up footing the bill for stranded and underused power plants. Wow. Wow. Josh Price, director of Capstone, said even folks who benefit from sky-high projections are realizing what happens if the pendulum swings back the other way and rates get unaffordable. Yeah, oops. Oh, that'd be a... Yeah, dude. That could actually increase the cost for artificial intelligence because prices go up even more because stuff gets underused and all these companies lose money. California's PGE revised down its data center pipeline by 400 megawatts. That is not 25 data centers. That's 25 maybe today data centers, but not new data centers. Because you're doing gigawatt data centers now. You know, that'd be like a half of a new one. Data center energy demands through 2030 vary wildly. Right. Yes. And they could all be wrong. The industry needs to prevent double, triple, quadruple counting. Yeah. Utilities have started cracking down on phantom data centers, overhauling their pricing strategies, and creating stringent rules. Right. Nobody builds a 100-story tower in Manhattan without some anchor tenants, and nobody should be building power plants without knowing there's a data center that'll actually need it. I mean, yeah. Yeah, but everybody's talking about underestimating demand. Right. Somebody says, Househack don't give a shit if it goes up or down. That's the thing. Like, we give 0 Fs. Like, the company gives 0 Fs about what's happening in the stock market or Bitcoin because we're 0 exposed. Dude, it keeps going. Look at that volume, bro. Holy moly. T-bill and chill. Exactly, dude. Is gold moving yet? No, dude. Gold's down 1/3%. Bruh. That's crazy, man. Alright. Federal workers return to work. Okay. The Doomers. Okay. Let's break some of this. We just need to do like a summary of all this insanity. There's just so much. So much. So much to talk about. Okay. All right. Shall we do a summary? We probably should. Oh, my lord. Okay, let's see. Wow, Bitcoin's at 98.3 right now. It's a liquidity crisis, dude. Nobody's got freaking money, man. Nobody, dude. Nobody's got money. That's the damn problem. It's straight down all damn morning long. I mean, we knew it would go red after the shutdown, but this is a lot of red. Holy crap. All right. Let's summarize what the hell's going on. Get to work. Take another sip of this. I like psychologically prepare because this is so depressing. Ah, tequila. All right.
Sync rate.
Oh. Okay, folks. Here we go. Why the heck is the market tanking? Bitcoin 98,000, NASDAQ Technologies down over 2%, straight down. Tesla down 7.5%. Disney earnings? Nobody cares, down 7%. Tech's falling, Bitcoin's falling, it's all falling. What the hell is going on and how do we reconcile all of this? Is this a buyable dip? Well, to know if it's buyable or even viable to consider buying in this market, you need to understand this chart. It has everything to do with liquidity. Now, remember, before we look at that chart, understand that liquidity is getting so damn bad right now, or available cash, that you literally have articles circulating that the Federal Reserve is saying, quote, the Fed may soon need to expand its balance sheet for liquidity needs. In other words, folks, we are going back to the days of the money printer. Brrr. Now, look, some of what's happening today is super short-termism, but some of it is long-term. AI, data centers, energy, what's going on with Meta, debt. We're going to talk about all of that. But there's also short-termism, and that short-termism is worth talking about to start with. One of the reasons why in the Meet Kevin Alpha report, and I want to teach you this, okay? It's not supposed to be a pitch on the Meet Kevin membership. I want to teach you why we talked about this in the Alpha report. For weeks, I've been saying that the most bearish moment is going to be when the government reopens. And people have said, Kevin, why would that be bearish? The government reopening should be good. Uncertainty goes away, right? Wrong. I'm going to explain exactly why, but this is the kind of stuff you get in the Meet Kevin Alpha report. You pay once, you get lifetime access. Check it out at meetkevin.com. So here's why it works. The government stopped issuing jobs, CPI, retail sales, GDP, import-export data. All of that was gone during the shutdown. When we have no news on that data, we can't say there are problems in the economy. So in other words, the shutdown actually gave us the best trade ever. No news is good news. The stock market hit all-time highs while the government was shut down. It seems backwards, but anything that would have been bad news, we didn't have to see. Now, yesterday, I sold stocks and sent out a trade alert because I said, hey, I'm putting my money where my mouth is. I think we go down when the government reopens. Now, that aligned with Donald Trump saying, America's back, baby, and futures were actually green when the government reopened. But what actually happened this morning? Well, we realized that we're about to get a slew of data. Kevin Hassett came out this morning and told us that the September jobs report has already been cooked. So we already know what's going to come out, aka it's ready for release. It'll probably come out next week. Great, so now we have a jobs catalyst for September next week. Presumably, the October jobs report will follow. The October jobs report is already being asterisked, though. It might be so bad, and this is the jaded outlook, but Kevin Hassett tells us that the October jobs report is going to be released without an unemployment rate attached to it, because the unemployment rate will probably skyrocket. Now, part of that could be temporary. In October, we're expecting to see the Doge layoffs from February that would show up in September after their layoffs are over, and then they'd show up as unemployed in October, combined with all the furloughed people. Like, the numbers for October could be really bad, but we're expecting to add all that back in. Goldman Sachs thinks we're going to have a negative 50,000 labor report for October, but a lot of people are just going to adjust that back in. So best case scenario, we have a good September read, bad October, and then a good November again, which will come out in a couple weeks, right? But markets are extremely leveraged. And so now we're going to get a flood of retail sales data, jobs data, inflation data, construction data, import-export data, and it's all going to update this Atlanta Fed real GDP forecast, which says GDP is at 4% in the third quarter, but that's based on a lack of data. So what happens when we get the real data? Well, we either confirm soft landing or we fall into recession. That's where people are today saying, okay, well, how do we reconcile that risk, the pendulum risk, with this chart? Friends, after a lot of work, we figured out how to use a numbers Excel style spreadsheet, and we were able to plot the FINRA margin data on this chart. So yeah, this is from my little spreadsheet. All I did was download FINRA's margin data, and I put a bunch of arrows on it. So it looks really like fancy and like a lot of work went into it. It was probably about 8 minutes of figuring out how the spreadsheet works and about 2 minutes of, oh shit. Anyway, here are the takeaways from this. The blue line is margin debt. The red line is available cash in people's brokerage accounts. Now, what you'll notice is today we have 26% more debt than we had in the 2021 peak over here, which means people are way deeper in margin. And your boy Kevin has been talking about paying off debt, selling assets if you need to pay off debt, getting out of margin, don't trust the big banks. I've been a little bit of a broken record about my fear of margin, and part of it is because of this chart. Since Liberation Day, debt has gone vertical. Now, yes, the chart isn't inflation adjusted, so maybe this is really just similar to this, but even if it's similar, what came after the 2021 peak of margin debt? A nasty year-long crash. Okay, this is where The Economist tells us we're actually facing 7 deadly sins. Now, I'm going to talk about that and what's going on in data centers and what's going on with AI valuations, but understand this bottom part of the chart too. Usually, when the market booms and margin goes up, the blue line goes up, cash balances go up as well. 2000 dot-com bubble, margin up, cash balance is up. 2006 bubble, cash up, margin up. What's happening now, folks? Quote unquote, this time is different. Uh-oh. Margin up, cash down. We have 26% more debt today on a nominal basis, with 21% lower cash available than in 2021. Part of this is because sentiment is like, stocks only go up, even though consumer sentiment on consumer spending is crap. Here it is. Consumer sentiment is absolute trash and declining, but household allocations to stocks are skyrocketing. And I think slowly you are getting people that are saying, hey, wait a second here. Are we overvaluing the AI boom? Well, that is now becoming one of the big questions, and it's leading The Economist to talk about the 7 deadly sins that are present in the economy right now. Take a look at the 7 deadly sins, because these are wild and they introduce us to the next parts of the videos, including phantom data centers. Take a look at this, 7 deadly sins of corporate exuberance. We'll keep it simple for us. Number 1, the lust for crypto. Crypto we know doesn't produce underlying earnings, but we love that on one hand because when earnings go down, crypto isn't necessarily associated with earnings going down because there are no earnings, which could be a good thing. Some people see that as a feature. The problem is crypto is also associated with being a risk asset. And when margin and debt are at all-time highs, not only leveraged ETFs, feeder funds like STRC, boy, I've got to make an expose video on that, MicroStrategy feeder funds. We start seeing when leverage gets tight for these funds, the ability to keep pumping up the underlying asset becomes limited. And so while it's really exciting that we've gotten this big movement of corporations going into treasury assets, there's a reason why in my real estate startup, I have refused to quote unquote treasury money into Bitcoin. Not because I don't believe in the innovation of stablecoins or cryptography, but rather because we are a diversified play. People are emailing us saying, hey, I want to diversify. I want to take profits on crypto and stocks. I want to diversify into real estate. And this is like our operating or our fundraising account where over 90% of this is our fundraising over the last period of time here. But I feel like there's an inverse correlation with the more people want to take profits on crypto and stocks, the more our inflows are exploding. And so it's kind of wild that, we're, 13 days, even less, I think like 8 banking days into November, and we've raised $1.1 million for a real estate diversification play, you know, with the flair of AI. Read more about that in the offering circular and disclosures at househack.com or reinvest.com. But it's interesting to me because you are seeing that diversification desire. And some of that comes from when we're maxed out on the new total addressable market for crypto, maybe it's time for a little bit of a breather. Then, hey, maybe that creates a buy the dip opportunity, right? Number 2, The Economist says the second deadly sin for the economy right now is that retail momentum and this sort of disconnect between fundamentals and realities is a risk factor. And they're not wrong. Elon Musk getting $1 trillion pay package when the stock is trading for like a 6 peg, Palantir with a 7 or 8 peg, price to earnings growth ratio. These are very high valuations, as well as then, of course, stocks that are actually kind of like companies that are losing revenue momentum, like American Eagle, pumping on, you know, Sydney Sweeney. But then again, that's not the only thing that pumps when Sydney Sweeney comes on screen. So this is what they call the second deadly sin, retail momentum. Circularity, this, I mean, we've heard this before. The Bloomberg, circular financing argument for NVIDIA and AI has been something we've been kind of complaining about for the last few months here. And it's this idea that, hey, is this circular financing? Or is this really just like no different from GM saying, hey, if you go finance a car with us, we'll give you a discounted rate or whatever on your car, right? Those are the arguments that you have right now, is people say, hey, when NVIDIA backstops CoreWeave, who's going to end up buying more NVIDIA chips, it's really just like financing their ability to buy more chips. But then you kind of run into these problems because I'm looking at CoreWeave's latest sales because I keep looking for their MSA, which is going to come out soon. I'll talk about that in a moment. And what you find is you've got an insider over here dumping $1.4 million worth of shares. This is one of their directors. But then today we had yet another filing, and Westclay Capital dumped $25 million worth of CoreWeave shares. And apparently these are founder shares. And so it's very interesting because insiders are dumping shares while at the same time everybody's being told that while debt is at an all-time high, it's okay because don't worry, this cycle of financing will go on forever. But I think this is where companies are getting frustrated. This is kind of like what we talked about yesterday. Yesterday we talked about how Meta is actually falling off a cliff over here, in part because people are getting frustrated that Mark Zuckerberg might be back to his old ways of drunken sailor spending, like what you saw during the days of the metaverse. I hate to say it, but when you zoom out, when Mark Zuck went metaverse crazy, the stock went on this like nearly 1.5 year sell-off, and the stock plunged from almost $400 about 75% to about $87. And so people are worried again that maybe we're in this same environment of overspending on artificial intelligence. And you'll notice that the stock that's not getting hammered is the company that's spending the least money on artificial intelligence. All you have to do is try testing Siri and you'll know that Apple spends basically zero money on artificial intelligence because there is no intelligence. But look at Apple. Apple at all-time highs. Meta is down like 25%. Microsoft is down 10 to 12% off all-time highs. Even Amazon is coming off. You can't see it on the week chart yet, but it's slowly coming down here on the day chart. Is people are concerned about the lack of cash flow at these companies and the amount of debt they're taking on. Amazon just had a quarter that is essentially indistinguishable from no free cash flow. Last year, $2.5 billion of free cash flow in a quarter. This year, $400 million. They're basically next to no free cash flow because they're blowing their money on artificial intelligence build-outs, and people are worried that these companies are going to be bag holders. I mean, the fact that Meta, here's Oracle, it's just a great example. They are way heavily indebted, massive amounts of debt at Oracle. People ask me in the Alpha report, they're like, Kevin, should we buy Oracle on this earnings boom? And I'm like, bro, have you seen their balance sheet? Have you seen how much debt they have?
Kevin is much more interested than most people, by the way, in the balance sheet.
It's bad. And eventually the bill comes due. Now, the issue with Meta is that you actually have a stock that is able to finance the $30 billion build out of a data center by selling the debt to special purpose vehicle investors. And then they don't even have to recognize the lease payments as expenses on their balance sheet as a current or long-term liability for the leases that they're committing to. Why? Oh, because rating firms say you don't have to anymore. That's insane. That's crazy. And it is scary. And it is a red flag that all of a sudden these circular investments are now starting to show up as off-balance sheet debts, even though you're technically having to make the payments for it. That's wild. So you have a liability, but you don't have to disclose it. It's kind of weird. Now, don't get me wrong. I think Meta is one of the cheapest out of the Mag 7 plays. But in a time where the underlying economy is starting to shake, with Verizon eyeing up to 15,000 layoffs, which, by the way, led the stock to actually green candle up, which is another red flag, mind you. Like, you got to think about that. When a stock pops on a day like today, when the Nasdaq's down 2%, 2.2% right now on the Nasdaq, that the Nasdaq's down, it's just like keeps bleeding today. We were bearish in the Alpha report this morning. That's why I sold stock yesterday, because of the government reopening. But anyway, the stock actually popped right here on news of 15,000 layoffs. You should see that as a warning sign. I want you to think about that for a moment. Think about the cycle that happens with layoffs and recessions. This is the scary cycle of layoffs. The way it works is simple. Earnings and revenue go down, so people at companies fire people to increase earnings per share. Revenue's flatline, they can't raise prices anymore because people are pissed about inflation, so you're not getting earnings growth, so what do? You cut in the middle. You fire people so you can get earnings per share up. Then the stock goes up, people are happy, but the problem is that then motivates other companies to fire workers, and then all of a sudden, eventually, you fired so many people that revenues go down, and then you're in a recession. The Economist actually thinks a recession could be really bad for the global economy. They actually say markets could topple the global economy. And what they talk about is not just the Buffett indicator being at all-time highs, but what they also talk about is the fact that so much of the world has exposure to American equities. They say that we're at an all-time high of American household net worth being exposed to the stock market, and international exposure to the American stock market is so high that we could literally create a mini wealth growth effect globally just by having a stock market sell-off in the United States. They say that a stock market sell-off in the United States could cause such a big retrenchment in consumer spending that you could see a 1.6% decline in GDP, enough to push America, where the labor market is already suffering, into recession. Now, everybody's been talking about the potential for a recession, and so far it's been staved off by AI, but that's actually the very problem. Remember that the one thing that's holding up our labor report right now has been, in my opinion, artificial intelligence. I mean, look at the last ADP report, okay? The last ADP report, which has come basically down to zero in part because of immigration. The last ADP report showed that really the only hiring was in the West Coast. 37,000 jobs. In my opinion, likely just AI hires. So what happens when that peg leg of the economy goes away, right? And in fact, that mostly in large employers over here, right? So kind of creepy. So it makes sense what the economy is saying, or what the economist is saying, rather. But the circularity is an issue. These, off-balance sheet financing issues are an issue. It doesn't help that now there's talk that OpenAI is peaking out on growth. It doesn't help that Elon Musk didn't get his Tesla investment into XAI, which I was not an advocate for that anyway. I don't think Tesla should be taking a profitable business and investing into a money-losing business. Elon Musk is rumored to be raising $15 billion more for XAI, which he denies, of course, but whatever. This doesn't help either for the AI plays. Look at this. Phantom data centers muddy forecast for U.S. power needs. They're basically saying that AI companies have these insane views of how much power that we're going to need in the world by the end of the decade, that what happens if we don't actually need that much data or that much power? Well, now all of a sudden, you'll have built data centers or you'll have built power grids that need to be repaid for, but you don't actually have use. And if you don't have that use, then you could actually increase utility rates, making existing AI even more expensive to operate, even more money losing, because now you're paying for an overbuilt ecosystem of power thanks to phantom data centers. You know, they make this quote here: nobody builds a 100-story tower in Manhattan without some anchor tenants. It's kind of crazy. It's kind of crazy to think about just how much is propped up on hope around data centers. Now, hopefully it's fine, right? I'm not here saying we're definitely going to go into recession. I just think we're at a turning point. And when you are at a high leverage point in the economy, you're at high debt. You know, this is why we have zero bank debt at Househack. This is why Kevin has zero personal debt, is because I'm not here saying I have a crystal ball. I'm going to tell you which way it's going to break. I'm just saying we're going to break in one way. We are very indebted. And the issue is, if we get good jobs data, good, we can soft land. It was a buy the dip opportunity. But if this is a liquidity crush and the Federal Reserve is going to have to go back into money printing mode because we're about to have a liquidity crisis, then you're going to see rates go to zero, the Fed run the money printer, and the economy and stocks could still go down, even in the face of money printing. Kind of creepy. I mean, you literally have people worried about the Fed cutting 25 basis points. Oh, is it going to happen in December or not? Who freaking cares? Who cares is the real question. But anyway, look at these other deadly sins. We're not even at them yet. Deal making, number 4, is what they say is the 7th deadly sin. Big boom in deal making, whatever. The debt gluttony, they say, is another big danger for the economy. I mean, that's what we've already been talking about with margin, but it's not just that. It's these off-balance sheet debt plays. Mind you, also what's happening with banks. Like, they make this argument that here there's patriotic pride by JP Morgan saying they will bankroll companies with a $1.5 trillion investment. People misread that headline so badly, and I talked about it when that headline came out last month. I'm like, JP Morgan, I even tweeted it. I'm like, JP Morgan is not going to give you $1.5 trillion of money because it's equity. They're going to lend you money is what they're saying. Oh, we'll lend. Because they said they'd invest like a couple $1 billion or whatever, like 1/100th of what they're saying. But everybody's like, oh my gosh, JP Morgan's so bullish on America. They're going to invest $1.5 trillion in America. No, they're going to lend because they're a bank. That's what they do. And then guess what happens? When banks lend money and then shit hits the fan, they take the money back. They pull credit lines, and that's when things go dirty. Like, we have not even, most people who are in margin right now have not experienced a bank calling you up and saying, hey, guess what? We used to lend you $4 on every $1 of Tesla shares you own. JK, now we're only going to lend you $2 on every $1 of Tesla share you own because, oh, volatility has changed. Oh, great. Well, you know how many people get margin called instantaneously then when you start changing the other? We're not even there yet. We're not even there at the broker-dealers freaking out yet. Broker-dealers are still trying to call up investors on a daily basis going, please take on more debt. Like, please borrow more money so we can pump the fintech space even more. That's what broker-dealers are doing right now. And it's so dangerous for investors. Because people don't read the terms of services that say these people can rug pull you on margin lines. It's the most scary thing about margin, is that they could change the underlying requirements. Economist goes on to say that the United States is now taking stakes. Basically, they're arguing that the United States is misallocating capital by investing in companies like Intel or MP Material or, U.S. Steel or whatever. OpenAI is now begging for a government backstop. Yeah, that's a red flag. Yesterday there was talk that the CFO of OpenAI was talking about basically user growth falling in October and turning negative because of changes to, their policies. But what if that doesn't change? What if that growth does stall and there's a cap to how many people want to use a commoditized service like LLMs, and the whole, peg leg that supports the economy rolls over? This is why you've got, there's somebody at Goldman Sachs that's arguing 93%, I think it was 93% of earnings that we've seen and earnings growth we've seen is because of AI. Well, what happens when that peg leg goes away? And then, of course, they just talk about greed and fraud, which is exactly what you see at Tricolor, First Brands. They're all pointing the finger at each other going, it's fraud. That's why we're going bankrupt. Not great. And so this is where they say, look at this, Robinhood. They point out that Robinhood has announced that client borrowing has risen by 153% this year. That's insane. That's crazy. So that means if you had, $100 of debt, now you're at like 240 or whatever something dollars of debt. It's insane the amount of money that that people are borrowing right now. So debt, big issue. We already know that. That's why economists are talking about 7 deadly sins. They also have a whole piece here where they talk about, again, the U.S. economy being so vital to the rest of the world that we will probably push low-growth Europe into a recession and China into a big recession. Now, maybe they're just being uber bearish here, right? Usually they say America would be a safe haven and people would invest in the dollar, but you've got problems because are people going to invest in the dollar this time because of tariffs? The protectionist policies that we've had now might not be good. They say, hey, if we do hit a recession, we could not be prepared for these consequences. That there'll not only be even more of a glut of Chinese goods, so more deflation, which is good, but that means even lower earnings for U.S. companies. So something to, I guess start paying attention to maybe a little bit, as well as this Fed liquidity thing. I mean, so far we've seen a relaxation in the repo market, but you get these little fits and starts over here on the repo market. But, even today, Hammock was talking about, we're going to have to inject liquidity again soon into markets. Makes you wonder why. Like, what are they seeing in the background? Who's leaking stuff or data in the background that is making everything turn so freaking red? I personally think it's because people don't have money. So they got to sell to raise capital so they can go buy the dip or whatever. But they got to pay off debt first. And it makes sense. The question then is, which part of this cycle are we on? And again, I realize this is probably not inflation adjusted, right? Like, I'm not trying to be dead bearish here, but I'm certainly not dead bullish either. Again, I'm very teeter-tottery. But it makes you wonder, what happens? Like, when does this margin debt, when do people wake up that debt is very bad at this phase of the cycle? I don't know. Somebody donated last week, and it almost makes me wonder if they're a stockbroker. And not to be jaded here, but I'm going to be a little jaded. They donated $500 on my live stream, and they're like, something to the effect of yeah, margin, baby. And I'm like, bro, the guy just donated $500 on my live stream to promote margin. And I'm like, man, what phase of the cycle is this when brokers or, people are begging you to go deeper into margin? It's really hard, but the challenge right now is being disciplined when everything is kind of mooning, Now, obviously today things aren't, but for me, give me the data, man, and then let's see what the data says. Now, I'm obviously going to take the data with a grain of salt. I mean, you know me, I'm not going to believe all the crap the government is just throwing at our faces. But at least it gives me the opportunity to be prepared. That's why I sent out an alert yesterday to my Alpha Report members and said I'm selling some. I sold over roughly $250,000 of stock, and I've been trimming some positions. I've probably sold $15 for every dollar I've bought in just the last 2 weeks or so. And so you get all those alerts over in the Meet Kevin membership. If you're not part of it yet, I highly encourage checking it out. You get lifetime access, best price guaranteed on the Meet Kevin membership. So you won't see the Meet Kevin membership at a lower price, guaranteed. You get every private live stream, every Alpha Report, all of the courses in one. It's probably a tax write-off as well. And you get the technical analysis every morning in the Alpha Report, for the last 2 weeks, my warning that Tesla's going to go, back down to 414. And, sure enough, it dumps. But, I mean, that was, I think, a pretty easy technical call. I'm not trying to minimize the call there. It was a pretty good call nonetheless. But anyway, we'll check that out over at meetkevin.com. And then, of course, if you want to check out HouseHack and diversify from the madness, go check out househack.com at, househack.com. And then reinvest.co is what it redirects to. Just to be clear to people, it's the same company. It's just a DBA. And you can learn a little bit about what we're doing, the AI we're building. Big announcements coming for the AI product before Black Friday. So we're really excited about this. But it's pretty cool. But it's all backed by real estate, which I love. And we just bought about 11 properties in just this quarter. And what do we have? We got a couple offers out there. I'll see if those go through. So we might be up to a lucky 13 for the quarter, but we'll see. Anyway, yeah. So let's see here. What's going on over here?
Reason not stocks. It's like a psychological trick.
I know, and it's the prime directive of investing: buy low, sell high, and when we're high, everybody wants to buy.
Stop
and when
the
we're
presses,
low,
Victoria. Buy low, sell high. So what do you make? Do you have a take? I know we're going to get micro. Yeah. You have a take on today?
Yeah, look, this is a little bit of risk-off free pricing. Everybody's waiting on NVIDIA day next week. We've had some bullish things on AMD and tech. Some of this is just a pullback, maybe some profit taking. I don't think AI is broken. We're still less than 4% off the highs. I know this feels miserable, but
yeah, that's the crazy part. Is like people are freaking out, and we're barely off of all-time highs. Like imagine when you actually have a real sell-off. Duolingo? Well, Duolingo it's more than I'd have to look at their finances, which I'm happy to do in a moment. But it's more than just the stock itself. Like it's an AI risk, right? It's all of the translation AI products that you now have. It kind of like, do you really want to invest in learning a new language right now when you could just at some point basically put on glasses or the Apple AirPods or whatever and have AI do the translation service for you? Like, I hate to say it, but it kind of dilutes the benefit of knowing another language. Now, I speak German. So, but I'm like, do I want to teach my children German? And I'm like, I feel like I do, but are they ever going to need it? I mean, maybe Spanish would probably be better, but dude, like with the translation stuff now, like, I don't know, man, like, you're almost better off investing in something else in your personal education than language, because AI just makes translating so freaking easy for you, you know? Like, who cares about another language right now? So I think that's that's probably the biggest pooper duper, you know? Somebody says Oceanside. Dude, I love Oceanside, man. Oceanside's fantastic. But yeah, I mean, I'm happy to look at their numbers. We could look at that in just a sec.
On how old our infrastructure is. The bulk of the U.S. infrastructure, especially the electricity grid, was built in the 1960s and 1970s. And so that makes a lot of it the average age of 40 years old. And now you're connecting it and having these massive needs for power and electrification. We need to build transmission lines to all of these data centers. We need to repair our transmission lines. We need to get ready for heavier loads. Quanta Resources is absolutely the key player in data line transmission.
And sell your book. Yeah.
It's not sexy, but you know what's sexy? Having power. Having power is sexy.
And data
Electricity.
centers are struggling to get power there. They need Quanta Resources. It's great. All found one. You can build this building. You can stock it with servers. Nothing works until you get some power there.
And there was an article in the FT about just this today, too, about how there's sort of this phantom demand because guess what? Nobody's actually plugged it in. Let's completely flip because you know what's sexy again? AbbVie, Amgen, and some of the...
No. Dude, he did not read the FT article. He watched Meet Kevin and listened to a portion of it, or he didn't watch Meet Kevin, just read the headline. It has nothing to do with people not plugging it in yet. It has to do with projections being off the walls. They're just spewing bullshit on CNBC, man. You didn't even read the damn article and you're referencing it, you knucklehead.
Is not at target, but it's not alarmingly high. So it makes sense that there's sort of more gray area and people are going to fall on either side of these decisions a little bit more than they normally would.
What?
Okay.
I think we got to go. I think we do. Listen, there's a lot going on, and I guess as the data comes in, we'll ultimately see. It is certainly an interesting time to be talking about the U.S. economy, that is for sure. Hey, Elizabeth, thank you so much. Elizabeth Rentor, she's senior economist at NerdWallet, joining us from Durham, North Carolina. All right, that's the latest on the economic backdrop. Let's talk equity markets. We're going to get to Dan Ives, talk about the tech sell-off in just a few minutes, but we got another stock on our radar.
Yeah, another stock that's moving lower. In fact, shares of Disney down about 8%.
Oh, look at CoreWeave, too. CoreWeave is at my next line. Actually, I think it just broke the next line. Yeah, look at that. It was sitting on the line all day. Just broke it. Dude, the end of the day is going to suck, potentially. Let's see. All right.
Officer Hugh Johnston joined Bloomberg Television earlier today, covered a variety of topics, including a succession plan for the current CEO, Bob Iger.
What the board has indicated is that will take place sometime during the first calendar quarter of 26. We report in next February. Whether that'll be before or after will be up to the board, but we should have it done by the end of March.
All right, that again is Disney CFO Hugh Johnston. As he said, Disney expects to name a successor to Bob Iger by the end of March. Keep in mind, Iger was there for a long time.
One named Bob or not one named Bob?
That's a good point. Oh, that's right.
That's my question. But it was Bob followed by Bob followed by Bob.
But okay, Bob Iger there for a long time, considered kind of a mastermind in terms of CEOs and what he did with Disney. Then Bob Chapek came in, and there was a lot of focus, right, on streaming, and then things didn't go
Just
so
reminding
well.
everybody about the succession last time
And
around.
Bob Iger came back.
Exactly, okay.
So we'll see whether or not they have to be named Bob. Let's see what our Geeta Ranganathan has to say. She's Bloomberg Intelligence Senior Media Analyst. She's at BI headquarters in Princeton. We're going to talk succession in a moment, whether or not the next CEO, Geeta, has to be named Bob. But more importantly, let's talk about the quarter that was and the outlook that is. What do we need to know about earnings?
Yeah, quarter that was fine. It was pretty much in line with expectations, Carol. I think what really has kind of spooked the street a little bit is guidance. Again, overall guidance for fiscal 2026 seems to be okay. I think really what investors are having a hard time kind of wrapping their heads around is the fact that, fiscal 1Q looks really soft, which means everything is going to get pushed to the back half of fiscal 2026. And I think that's what's causing a lot of the nervousness that we're seeing today.
I want to go right to the successor. Disney board will name a successor to CEO Bob Iger.
Does it have to be named Bob?
Yeah, I mean, well, who's on the short list right now?
Yeah, so I mean, the first big question, Tim, was, is this going to be an external candidate? Is there going to be an internal candidate? So it looks like initially when they started out, it was all 4 internal unit heads that were in the race. So we're talking ESPN's Jimmy Pitaro, we're talking Josh D'Amaro of the Parks, Dana Walden, and Alan Bergman from the studio and content division.
Okay, this is boring. All right, what else we got here? Boring. We gotta talk the housing summary too, but I want to see what else. Trump plans to attend Davos meeting. That's fine. What else do we have here? Wall Street Journal. Verizon to cut 15,000 jobs. NASDAQ lead slide. Secret meeting ended. Chinese hackers used Anthropic. Anything on the info? Baba Rand. Yeah, Lyft hits the gas. Real winners of enterprise software markets. AI agent free-for-all. Why NVIDIA keeps backing. Yeah. Okay, what is this? Nearly every established seller started doing agents. We saw that. Everybody's doing the same thing as once. There's an enormous amount of competition. Okay. Given how many agents are popping up, several buyers woke up and prefer to keep track of new agents in one app. Yeah. Now you need an agent consolidation app. Right. This is ridiculous, dude. Bloomberg. Apple aims to capitalize on mini app trend with new program. Lets iPhone maker collect revenue for mini apps and games within larger super apps. Mini apps takes 15%. Huh. Mini app creators. Whatever. Apple's got to figure out how to make some dollar hollers. Larry Summers. Swimming naked. Uh-oh. Scaramouche. Botox Empire. The fuck? Alright. Let's see what else. Aston Martin chair explored buyout with the Saudis. Oh. Aston Martins are awesome, man. I want an Aston Martin. Somebody buy me an Aston Martin, please. I want to remake James Bond. Okay. Wow. Where's the fun? I guess we could go see what the... Any interesting code warnings? Yeah, I know, right? Oh, let me go look. Let's see. Let's go see what the Doomers have. No, I'm not gonna buy an Aston. No. Okay, we are gonna go. Let's see what the suits are saying. Risk off tone is hitting commodities hard. Commodity space is under pressure, accelerating a sell-off into the afternoon. There's a lot that could go wrong with stock valuations. Yeah, particularly relevant as AI firms spend fortunes on tens of millions of data center. There's so much contention over how long the useful life for these chips will be. Well, yeah. Long until it's not. Long until it's short. Okay. Trump trade 2.0 is almost here. What is that? Bond markets. What's their Trump trade 2.0? Resumption of the Trump trade. More indicative of a recession risks are taken off. Yeah, that's the weird thing. Is like, why is the 10-year rising? You know, if there's true recessionary fear, that's the thing. I mean, there's only a 49% chance of a dump, or a 49% chance of a 25 basis point cut right now. That's it. It's kind of crazy. So. Get out. Soon all stocks will require 100% maintenance requirement and you're donezo. Oh, is somebody talking about margin here? Yikes. What else y'all talking about? And we gotta do the real estate talk here in just a moment. You ain't seen nothing yet, so oh man. Alright. Okay, let's talk about this real estate situation for a moment. Because it's pretty bad too. All right. So, housing. What the hell? Where did I put it? Housing. It was the Wall Street Journal article, I know that. What did I do? Oh, here it is. Yeah. Okay. Oh yeah, no, Jensen actually just finished his stock sale plan. I see your $10 donation there. Okay. Okay. And then how are we still doing on the sticks? We're still kind of stable. 2.26 right now. All right. Somewhat holding in there. Okay, cool. So why is this crashing? Wait. My computer does not have the memory to keep this going. This is kind of funny. Which is insane because the computer has so much memory. Let's just start closing some stuff. So I really want to talk about this real estate thing. Can't keep it up. Too much. Alright, no problem. Wall Street Journal. Builder. It's the builder bubble. The builder bubble. There we go. Okay, perfect. All right, let's talk about this. So, what do we got? There we go. There are now concerns about a real estate housing crash in a very specific part of the market, and it's led by buyers who are already heavily underwater. This is scary because it brings us back to the thoughts of the days of 2008 that we thought were behind us, where people could borrow more than the home was worth, and those ended in 2008 after the crash, or well, so we thought. It turns out home builders have figured out how to get people underwater, and I'm here to explain what's going on. Listen to this. Of the roughly 28,300 FHA loans that Lennar Mortgage originated, which is the mortgage division of Lennar Homes, a home builder, over the 2-year period tracked in the Ginnie Mae's mortgage database, 27% of them are now underwater. At D.R. Horton, 18% of those people are underwater. So why all of a sudden are people underwater, and how do people get underwater when they're buying new home construction? This is scary, and it's a really important lesson for you as a long-term investor. And something that I mentioned this morning that I want to reiterate here is, folks, if there's one thing you recall from this video is write down a little sticky note. If you ever see foreclosures in the long-term future on new construction homes, they're often really great deals to buy. Because if homes are built in 2018 and they get foreclosed in 2028, you've got a 10-year-old home. You not always, some builders suck, but usually don't have to worry about things like the roof or the foundation or the plumbing or the sewer lines or whatever like you would in a 1950s home, which almost 100 years old, right? Instead, you could potentially get a great deal for pennies on the dollar, which is great for people looking for opportunities. Now, most of these we think are going to be concentrated in areas of new construction home building, which makes sense. Sort of housing clusters, they call it. See, the Wall Street Journal says, the risk is that owners who paid an overinflated price will find themselves underwater soon after the sale closes, or already do. Newly built homes can be clustered in areas with plenty of new supply, which exacerbates the problem if values fall. I've said it 1,000 times on the channel, and I'll say it again. When you get new construction home builders gone wild, like instead of Girls Gone Wild, it's new construction home builders gone wild, you end up getting declines in prices. And it's actually a feature of capitalism. A feature of capitalism is that when there's money to be made in home sales or building homes or new construction homes, what happens? Well, you end up seeing an oversupply of new construction and a decline in prices. That's not true across most of the nation. Across most of the nation, you can actually see that in 2025, not only are housing prices at the highest level we've seen in the last 4 years, but we're actually inflecting up on home prices, which is insane. And it's only when you go to those overbuilt metros like Austin, Texas, that you actually see that home prices are kind of flat to 2023, but compared to 2022, you're actually down a chunk. Parts of Texas and Florida home prices have collapsed in part because of the overbuilding of supply. Now, wait a minute. How can people actually end up buying real estate and being upside down on it? And this takes a little bit of an explanation, but it's actually pretty simple. So I already wrote this out for us to make it simple. Let's say you want a 3-bedroom, 2-bath house in the 1337 zip code. You look at homes, you get pre-approved, and everything's a 1960s, 70s, or 80 home, and you're like, oh my gosh, old neighborhoods, smelly, dated homes, you feel like you gotta remodel everything. They're all selling for $450,000. That means for $450,000, those are your comps. 3-bedroom, 2-bath, call it 2,000 square feet. Those are your comps in that zip code. Then you go walk into the Lennar neighborhood. And the Lennar neighborhood is basically like a sexy girl pulling her top off going, look at my package, bro. And the package is really sexy. It's only $50,000 more than all the comps in the neighborhood, but we'll buy down your interest rate to 2.99% and we'll throw in some upgrades for you. You get a quartz counter. You get a quartz countertop. You get a quartz countertop. Why? Because that's how the home builders prop up the prices in the neighborhood, which they have to do. Think about it, folks. If you're selling homes or that you're building, you build them in phases. You build them in phases because you can't afford to build 5 phases of homes at once. Lenders or construction lenders will actually give you money for phase 1. You build it out, you sell it, and then you got to show them that you sold phase 1 so you can actually start financing the construction of phase 2. This only works if prices are going up. $499, you know, call it $509 for the next phase, $519 for the next phase, $529, $539. Well, how do they do this in a market that's declining in new construction neighborhoods, parts of Texas or Florida, where you have this glut of homes? How do they do this? Well, even though market values might be declining, what they do is they throw in more incentives. Oh, these titties aren't good enough for you at 2.99? How about 1% mortgages? We'll buy you down to a 1% mortgage for a limited time only. Seriously, you're literally starting to see some of these things get pitched at new construction homes because that's how they can end up selling properties. I kid you not. Look at this. Realtor.com. Mortgages below 1%. They exist, but only for those who buy before the end of the year. I kid you not. Pressure sales, end of the year sales tactics. Look at this. D.R. Horton, the nation's largest home builder, has introduced a mortgage incentive program that drops the intro rate below 1% for qualified home buyers only. Oh boy, we're back to 2007, boys and girls. You can now get a 1% mortgage. And how's that for propping up phase 5 home prices? Oh, but wait. Then you go buy a phase 5 property, and then guess what happens? Well, all of a sudden you go into escrow and you're like, oh, I'm gonna finance even more upgrades. I'm gonna finance crown molding. I'm gonna finance new flooring. I'm gonna finance blinds. I'm gonna finance solar panels. Now you buy a house for $550 to $500, or even $600,000. And then somebody's like, hey, what's this place gonna be worth after you buy it? Well, much like a new car, I hate to say it, you end up walking out and guess what? All the houses in that neighborhood are selling for $450,000. And so it's like, well, crap. The new construction is all of a sudden now what? Way overvalued and way overpriced. And this is how you end up getting a lot of these first-time homebuyers or FHA homebuyers absolutely screwed. You rope them in to these terrible deals that are introductory financing, motivating people by, oh, you don't have to refinance, or you don't have to renovate the property, you don't have to do anything, you could just move in, it's so great, it's nice and easy for you. And you rope people in with 3.5% down payments and introductory loans. They finance themselves to the whatever max, and then guess what? Oopsie doopsies, you're upside down. And that sucks. That's how foreclosures happen. And it's not good because it's exactly what's happening, especially in overbuilt areas right now. People are getting suckered in to what are bad deals. Now, I'm not saying you shouldn't buy a place with 3.5% down. I actually think you can get a good deal with 3.5% down. You just got to make sure you buy a wedge deal. I talk about that a lot on the channel. Quick example, you buy a $450,000 home for like $350,000 because it needs 50 grand of work. Then you're into it for $4,000. But you're into it for $4,000 in a $450 neighborhood, you have $50,000 of buffer. New construction is literally a negative wedge. So you are literally upside down on new construction most of the time. Hey, if you're gonna be there for the long term and you can afford it, great. But I typically tell home buyers of new construction that you generally pay a little bit above market value, and if you get too crazy with financing, it gets even worse. And that's great if you can afford it, but if you lose your job and you're upside down, it sucks. Anyway, I have to go to a meeting that I am late for. So I apologize, the Duolingo person and the SEC filings for NVIDIA. I'm happy to check those out, but I can't right now because I gotta go. So, house hack meeting commencing. They'll be fine. I'm only a minute late. I always feel bad about that, but I gotta get to it. I love you all. We'll see you. Bye.